Hey everyone, and welcome back to Swan Signal Live. This is episode 52. I'm here with Jimmy Song and Mark Moss. Really excited to dive into this one with you. Before we do, a quick note from Swan, and I just want to let everyone know that we're also live casting this or live streaming this into Clubhouse. There's a Cafe Bitcoin room, so if you are a Clubhouse kind of person, you can head in there and listen, background audio this thing, and Jimmy and Mark will be joining us for a Q&A after this episode. So check it out in Clubhouse, Cafe Bitcoin. Just look for the Swan Signal Live with Jimmy Song and Mark Moss room, and we'll be in there after the show. All right, so this podcast, the show, is brought to you by Swan Bitcoin, the best way to accumulate Bitcoin in the United States with automatic recurring buys, with instant buys, with wires supported up to $100 million buys. We just launched Swan Private at swanbitcoin.com/private to support this deluge of demand that we've received since Michael Saylor really kicked off the trend of using Bitcoin as a corporate reserve asset. We've had entities and corporations and high net worth individuals, trusts, nonprofits, entities of all kinds, even municipalities, reaching out to Swan to get them on to a Bitcoin standard, or at least start stacking a bit of Bitcoin in their treasuries. So that is really exciting, taking off right now, just trying to keep up with that demand. It's very, very bullish for both Swan and for Bitcoin in general. So check out Swan Private if you or anybody you know would like to start stacking some sats. And remember, we do have a referral program called Swan Force. That's at swanbitcoin.com/enlist. And that does apply to Swan Private. So you can stack a lot of sats if you can find some businesses in your social network that would like to start stacking as part of their treasury. So, get out there and start landing some whales, and it's good. It'll be good for you as well. You can stack sats while we're stacking new Bitcoiners for the network. Let's see what else we have. Lots of amazing educational content. We're dedicated here at Swan to Bitcoin education. We like to think of it as our marketing. Our marketing is education. That's part of what we do here at the show. We're on Clubhouse a lot. We helped kind of kickstart this Cafe Bitcoin thing, which has now become adopted by the wider community and has rooms going almost 24/7, and we have rooms in 7 different languages now. A room focused on Africa, a room focused on Asia. So we're sort of taking this geographical and different language approach to Bitcoin and really opening this Bitcoin education up to to the world on this really amazing new platform that seems to be really useful for Bitcoin education. So definitely check out Clubhouse. I think the Android app is coming out pretty soon. There looks like there's an open source one you might be able to track down. And if not, we are streaming some of these rooms into YouTube. So the Q&A will be streaming here afterwards as well. All right, so let's dive into this episode. Jimmy Song is with us. He's a Bitcoin educator. He is also a Bitcoin developer. He's written several books that are well loved and highly recommended in the Bitcoin space. Welcome, Jimmy. How's it going, man?
It is going well. I'm in the middle of cooking a steak, so if you see me going in and out, that's why that's happening. Yeah, but good to be here.
Nice. No problem. I mean, that's definitely a worthwhile reason to go off camera. Just don't tell us how good it is. At least mute your mic when you're making your delicious steak, savory sounds. Mark, how's it going, man? Welcome. Mark is a YouTuber. He is at youtube.com/Mark Moss and talks about finance and investing and more about Bitcoin. How's it going, Mark?
Yeah, it's going great. I love talking about the need for good, sound money like Bitcoin, decentralized money. So happy to always be here. And man, Jimmy, you got me hungry. Another carnivore here on the call.
That's awesome.
Yeah, I'm not full-fledged carnivore, but I don't know. I'm moving. You guys have been moving me slowly for 3 years. I'm on the keto step at this point.
Yeah, I'm not full-fledged either, but
it is great though. Yeah,
it is my goal by the end of this episode to get you guys to become carnivores. Let's see if that works.
All right. Well, we can definitely get into it. I'd like to hear the case for carnivory over keto, but maybe we'll save it for a little bit later. We can kick it off just talking about some news. Mark, let's start with you, man. We had this report dropped yesterday, and it seems like it doesn't seem like we absolutely do have news coming out of the financial sector on a regular basis now. It's, several times a week at this point is the cadence, moving, toward daily big news from big banks and corporations, investors, et cetera, who are revealing positions in Bitcoin or otherwise, showing that they're very bullish on the asset as a reserve currency, as a reserve asset, as collateral, just as a way to avoid the onslaught of inflation that we're seeing. Citibank joined those ranks yesterday with a report about Bitcoin that was essentially came down to, we're really, really, really bullish about Bitcoin, or it's going to fail completely. So where do you think we are at this point? Is it even a possibility in your mind that Bitcoin fails at this point?
Who's it for? Mark? Or
Mark?
Me?
Yeah, sorry, Mark. Yeah.
Was that question
Mark,
to me?
Yeah, it was to you.
You were asking about the Citibank news and the bullish news on that?
Yeah. Citibank and basically that it came down to whether or not Bitcoin will thrive or die. And was like, I'd love to hear your thoughts on Citibank stuff in general, but I also thought we could start with whether or not you think it's even possible for Bitcoin to die at this point.
Well, I would like to address that Citi news if I can for a second. I just did a video yesterday where I kind of broke into that. There's a leaked report that came from Citibank, and they talked about, I'll read from it. It says, Bitcoin is the new gold. And are you hearing me okay?
Yep, yeah. We got you, man.
And they said that they were talking about Bitcoin being the new gold. And then they talked about how, quote, it's a natural store of money. And then they went in and they started talking about central bank digital currencies. And they said that central bank digital currencies are a double-edged sword because it makes it easier for stimulus, but the other side is that it makes it easier for capital confiscation. And they said both of these scenarios are positive for Bitcoin in the 21st century, which give us the digital equivalent of Bitcoin versus fiat, as opposed to the 20th century, which was gold versus, Bitcoin versus fiat digital versus the 20th century, which is gold versus fiat paper. And so I thought that part was pretty amazing right there. They not only do they see, it being a better store of value as far as regards to gold, but even as these new central bank digital currencies are coming out. So it's not just kind of what they're seeing right now, but kind of the future that they're seeing.
Yeah, I think thanks for that summary, Jimmy. What do you think just in general about these big institutions coming into Bitcoin? Do you see it as inevitable, and do you see it as posing any risk to the network in any way? Maybe it's too early. Maybe, I don't know. What are your thoughts there?
Yeah, good question. I don't know how used to controlling things investment banks are, but surely it's a lot because they're able to manipulate the Fed in various ways and put political pressure and so on. So, whatever they do is probably going to make 2X look like Pee-wee football. And this is like, the big leagues here. We'll see exactly what they do, but I suspect at some point they're going to try to take over Bitcoin, and it's going to be a lot more pressure than 2X was. But I think that's still quite a bit off. At the moment, they're focused on making sure that they have exposure to the asset, which makes sense. There's no yield anywhere, so it makes sense that they're going to the one place where there's yield, and that's Bitcoin. As far as like, is there any reason to think that Bitcoin could be stopped in any way? I think it could be slowed down, but I think as far as its success, I see it as inevitable. I really don't see anything sort of slowing down this train at this point.
Yeah.
What I would add onto that would be that I did also kind of make the case that maybe Bitcoin is too big and it's in the government's best interest to let it keep going at this point. So they wouldn't want to shut it down. But kind of to Jimmy's point, having these financial institutions coming in, they're gonna want to control it, and that's really what it always comes down to. Is right. Bitcoin is decentralized. Nobody controls it, but they're going to want to control it. So like that is kind of the risk that I see. And so maybe some of the choke points would be obviously the one they're already talking about would be being able to custody it on your own, right? Having your own wallet. That'd be one issue. The other issue is, I'm not a big fan of these ETFs that are coming on board. What we've seen through the gold precious metals markets, silver 250 paper ounces for every one physical, 500 gold ounces for every physical. And so it's just a massive leverage for manipulation, but also it distorts the supply and demand equation. So instead of buying Bitcoin, I can just go buy paper Bitcoin. And so that messes up the supply demand. So I think those are probably the two areas that I would look at, kind of weak areas where the financial system could financialize Bitcoin, so to speak. I think there's built-in defenses for that, but those are some areas I would watch.
Yeah, I think that's, we've talked about this before on this show, the idea that, like, how do you defend against rehypothecation of Bitcoin? And that's definitely a subject that I think we should talk about and hear from Jimmy on. I also want to just put a peg in the idea of, we can go in and I think talk to some viewers about the history of SegWit2x and how, companies in the Bitcoin space came together and sort of paired up with big miners in the space to try to push through a particular code change as sort of a way to understand what we learned about Bitcoin governance from that scenario, and how big corporations might band together, much bigger corporations might band together in the future to try to push through some protocol changes that they would see as favorable to their control of the network, for instance. So, Jimmy, do you want to just kind of lay that scene in the context of setting up a conversation about how, these bigger corporations might try to do something similar in the future?
Yeah, I mean, essentially, the rehypothecation argument, I think, comes into this because what a lot of these ETFs and things, what they'll try to do is to rehypothecate or naked short sell or what have you to add to the supply that doesn't exist. And this happens in the gold market. This happens in the stock market. This happens all over the place, and it's because there's a central controller. So. I think the way it plays out is that they're, something like an ETF, and they're going to, essentially issue more shares than they actually have to back it. They're going to try to fractionally reserve it. The thing about ETFs is that usually they have some sort of conversion mechanism. So if you buy spiders and you're a hedge fund that wants to arbitrage that, if spiders goes up above the nominal price of the S&P 500, you buy the basket of shares, but it's only in very large amounts. So you go buy the entire basket, and then you convert them to the components of the S&P 500, and that way you can essentially sell them and make the arb on the difference. So ETFs, I think, have to have something like that. So this will be sort of our defense against rehypothecation, or sort of the games that they play with a lot of these things, is this ability to convert it to real Bitcoin. And at that point, if they don't have any to give out as a result of too many people redeeming, that would essentially be a bank run. And at that point, all the naked short sellers would have to come in and make it whole, and it would absolutely devastate them. So that mechanism is what they're going to try to prevent. And with respect to SegWit2x, what had happened there was that the miners and a lot of large businesses within the Bitcoin ecosystem sort of banded together, and they wanted to create a situation where they would get to they wanted the whole community to forcibly upgrade. So they told each individual that was running a node, hey, you're going to have to upgrade if you want to continue on Bitcoin. Most of us that were around at the time just kind of said F you, and basically discarded their thing. And a week before it was supposed to actually launch and do that, they abandoned it. And that was a big sort of point in Bitcoin's history where we found out that the users were actually in charge, and that the miners and big companies, tried to push something through and they couldn't. I suspect that, once this shell game plays out a little bit with a lot of rehypothecation and a lot of redemptions and stuff like that, I suspect that a lot of these investment banks will attempt to take control before that happens so that they could get bailed out should some situation like that happen where they're doing naked short selling, where they're lending out shares or Bitcoin that doesn't exist and playing all these financial games. They're going to want to bail out. And in order to set up for that, I think they're going to try to take over. Like I said, I think it's a long time away, but this is something that we're going to have to get ready for as a community and make sure that they're not able to essentially get bailed out by the protocol, because protocol ain't changing. You're not getting more than 21 million.
Yeah, Mark, you want to jump in?
I would like to add, I mean, just kind of game playing that a little bit, right? Like there is a little bit of natural defense in there, right? Where, we're obviously gaining more and more people. I know Swan's mission is to onboard, I forget, 10 million people or whatever it is. And so maybe by next year, there's 1 billion users of Bitcoin, right? And so really anyone can just fork the coin, right? Fork the chain, but the value comes in the network effects, right? Of that network itself. And so let's say that you have a handful of institutions that want to capture that network, but the billion people don't want that network to be captured, right? So all that value could always be forked over to a new chain. And so, I mean, that can get into a big situation, but I mean, if 1 billion people want the chain to be over here and it's been captured by a handful of corporations over here, there could be a scenario where it has that kind of defense built in, maybe. I don't know what you think about that, Jimmy.
Yeah, I mean, that we'll see what they try, but I'm sure the attack will be a lot more sophisticated than 2x was, and it'll probably use every dirty trick known to man. And investment banks and a lot of these financial institutions are used to having safety nets provided for them, and if they don't have it, then they're going to feel uncomfortable. And they like playing the financial shenanigan games. They're very good at influencing people with money and so on. So they're going to try something at some point. When that happens, I don't really know, but I suspect it will be to defend against some sort of like bank run, which I think will happen if I think it's inevitable. I think it's definitely going to happen at some point, and they don't want to be the ones that are completely wrecked as a result. So they like playing these games. They want to suppress the price. They'll probably lend out shares that don't exist, like they did with GameStop and many others. But yeah, that's where I see this going. What they will try is really only limited by their own creativity, and our defenses hopefully are up to that task, because that will be a major point in Bitcoin's history, and it will prove its true anti-fragility going forward.
Two things I would just add on to that again would be, one, that when something like that would happen is probably when we see those tools being built up. So lots of ETFs starting to stack up that are not physically settled, but they're cash settled ETFs, because that's the tool that they're really going to probably leverage. So I think we'd look for when those really start piling up. That could be a problem. But the other thing that also gives a little bit of a defense, we talk about it happens in the gold markets, but if you're an institutional investor, like, to actually take custody of all that gold is a pretty big deal. I mean, it's very expensive, very time consuming. You have cost of storage and security and all these things. Other assets are very similar, so you don't always want to physically settle them. You're just trying to get participate in the USD value of it. Whereas Bitcoin can be, basically custodied and stored at almost no cost. I think we'll see those security protocols getting better and better and better, the UI, UX, et cetera. And so maybe that changes it a little bit as well. But yeah, the future is unknown at this point.
Yeah, absolutely, of course. And having this conversation, because I hadn't really thought through this potential attack, and I'm glad Jimmy brought it up. And maybe we can talk through just a little bit more. But I think the defense that we would have to have against it, right, is education and teaching people what Bitcoin really is, what it's about, what makes it important, how money has gone wrong in the past, and why it's important to be decentralized and to take ownership over your money, run a node, etc. I feel like in the Seiko 2x times, the market cap and the number of people involved were quite low, and so it was possible for a band of 1,000 Bitcoiners, roughly, or whatever, to make a lot of noise on Twitter and, sort of basically call a bluff from stronger entities and get them to capitulate, and prove that miners and businesses want to mine on and serve the chain that users want to be using. So that principle, to be as a defense, right, that we need to prove that users, the vast majority of Bitcoin holders, are behind this change or not making this change. And if there are Bitcoiners that are holding on Robinhood or PayPal where you can't even withdraw, and that's a significant portion of quote unquote Bitcoin holders, it seems like the next battle that might be similar to this in style would be way harder, like more orders of magnitude harder to defend against. So Jimmy, if you agree with that, or first of all, do you agree with that? And if you do, like, what can we do differently to sort of scale up that defense?
Yeah, I'm not sure the attack will come necessarily as, hey, you guys all need to run this particular hard fork or something. I mean, thinking more about it, the weapons of choice for any sort of like financial institution are regulation. And this is generally what they do with governments, and they cooperate to create regulation that's very favorable for them. And if you game this out, I suspect that what will happen is they will naked short sell with their ETF. They will lend out Bitcoin that doesn't exist, and so on. And at that point, they'll be insolvent, and that'll be pretty clear. People will start redeeming. And I suspect what will happen is that the government will give them the privilege that they've given to every bankrupt or many bankrupt banks in the past, which is to say, you're not allowed to redeem these, right? Like you're not allowed to take these out, or something to that effect. And also the ETF or pseudo Bitcoin that's on these exchanges has to trade at par with real Bitcoin, something to that effect. Some kind of legal tender law or something like that essentially equates the two. I think the black market will clearly favor the actual Bitcoin, and the people will be holding onto their Bitcoin, and most of it, I think, will be not on these exchanges, and the exchange Bitcoin will trade at a discount in most ways. And despite the legal tender laws or whatever, black markets will thrive. But then eventually, I mean, that's the direction that they'll want to do it. It'll be probably more of a regulatory legal vector. That's essentially a way to force people to accept the fake Bitcoin from these institutions rather than the real Bitcoin that's actually provably on chain and so on.
Right. That makes sense.
One thing that I think could add a wrinkle to that, I mean, if we want to play, hopefully play a little devil's advocate on that, would be, I think Bitcoin is definitely a lot different than any other asset in a sense, where it's open, right? So it's an open network, and we have on-chain data. We have access to see how many coins there are, where they're at, et cetera. And so right now, most of this manipulation happens in a market that you have no visibility, no transparency in. And so, how many gold ounces are held by this ETF, and we don't really know these things. And so I don't think it's just the public that cares about this. Other financial institutions, whether that's Fidelity managing people's money or those people that have their money going into those funds, they care about that. And if those ETFs, those funds that are trying to do the manipulation are lying about it, and now there's total transparency to see that, I think that by itself could have some defense. And like I said, not even just among the people like us, but even other financial institutions are like, I'm not going into that ETF. You don't have any money. You're 5-to-1 leveraged or whatever it may be. And so maybe that transparency aspect of it will make it a lot harder for them to do that.
Yeah, I suspect that, proof of reserves and things like that will become much more prominent. Whether, they're going to subject themselves to that, I don't know. But this is where consumers that are more discerning will go with the ETF that's showing proof of reserves for the number of shares that they've issued. But then again, like, you can have proof of you can say that you've only issued 100,000 shares with this much Bitcoin backing it, but if you lend out shares that don't exist, you're effectively lending out Bitcoin that doesn't exist. So I'm not sure how you do that unless it's some sort of more verifiable system than the current one that we have. And who knows? Maybe this brings like all sorts of reform and creates a market that's more transparent in that regard and shows okay, well, now we can prove that there's only this many shares issued and this many Bitcoin that actually back those. But all that is, I think, kind of secondary. At some point, like, people will be demanding real Bitcoin, and ETFs are just one step along the way. And it's at best temporary. It'll exist for some time. But the people that like just hold that instead of real Bitcoin, well, they're the ones that are most in danger. And I think that there'll be a minority compared to the vast majority of Bitcoin that will be held privately. We're seeing that right now. A lot of exchanges have Bitcoin, but they're seeing outflows like crazy because of situations like this. And that's ultimately the big defense that we have against it, not like proof of audits or whatever.
Yeah, I think another potential defense, especially on the regulatory front, is that we're seeing more and more Bitcoiners in government, and they're becoming more outspoken and adding laser eyes to their profiles, and like they're not being shy about their being very much in favor of Bitcoin and pushing it as a something that's fundamentally good for America and for the world. And so if that continues, that trend continues, and as we all know, like Bitcoin incentivizes its own marketing, its own development, its own like representation in government even. And so if that trend continues, which I obviously believe it will, it has empirical proof, then we have a majority or like a vocal minority in Congress making noise for pro-Bitcoin legislation, saying, hey, this is a way that we can really clean up our financial system with this technology. We can have a more transparent system. This is good for business. This is good for consumers, and to really make that case. So that could also be a forum for defense on that front, which I'm excited about.
I also would say that, we've also reached a level of entrenchment, maybe taking a word from Preston, but right, we have, as you mentioned, right, we have now people in levels of government. I mean, Gensler going in at the SEC and Loomis in and Senator, et cetera. But not just that, but we have now, the Michael Saylors, the Elon Musk, et cetera. I saw, was it yesterday? I think Mr. Wonderful, Kevin O'Leary, said he took a 3% allocation. But what I really liked about what he said is that of all the businesses that he consults with, which I would imagine there's a lot of them, they're all talking about how to move their treasury into Bitcoin. And that was a pretty big statement. And so I start thinking about all these businesses, businesses, not financial firms, but businesses, the Michael Saylors, Elon Musk, and the smaller players that are holding Bitcoin on their books. And they're not going to want the market to get destroyed by these ETFs either. And so like we're building up an army. And so, the mom and pop retailers at the bottom with their, half a Bitcoin only have so much weight. But when you start getting businesses and then even billionaires who are invested, who are entrenched in that fight, there's more opposition. So we'll continue to recruit more.
100%. Quick thoughts on Coinbase IPO. We all, I think, are in agreement watching on this show and probably listening in Clubhouse that Coinbase is not the preferred, or at least our preferred or recommended way to buy Bitcoin, but they have arguably done a lot to make Bitcoin more accessible to a lot of people with creating a regulated, relatively user-friendly exchange back in 2014 and being one of the first on that front. So they have exposed a lot of people to Bitcoin and made it easier for people to buy it over the years. Let's set aside the obvious argument that they also are a shitcoin casino and have misled a lot of people into losing a lot of money because of that fact. What do you guys think about the price of the Bitcoin or the Coinbase IPO? It's in the futures market looking like a market cap of about $100 billion. That's pretty amazing. What do you guys think it will do for the Bitcoin industry, not just the exchanges, but also this kind of emerging set of services and businesses that are Bitcoin only?
Yeah, I think they're priced like a lot of assets on the market right now, a lot of
Yeah.
equities, which are just insane multiples of revenue and revenue, not even profit, right? Like
Right.
it's kind of an insane valuation in my mind, especially because they have so little Bitcoin in their treasuries. They had something like $130 million worth of Bitcoin on their balance sheet as of December 31st, 2020, which works out, I think, about like 4,000 Bitcoin or something like that. They're like tiny companies that have more Bitcoin than that. So to me, they're overvalued, like most equities on the market. They're not trading at reasonable multiples. It's becoming the stock market is a proxy store of value at this point, rather than cash or anything else. And Bitcoin obviously benefits from that dynamic as the Fed continues to expand the money supply. But as far as their valuation, it seems kind of high to me, especially given the low Bitcoin exposure that you're getting out of it. They are making a profit, so maybe there's some people that are thinking, hey, like if I buy this company, I'm kind of like buying the people that are selling shovels to the gold miners or something like that.
Right.
Just, kind of, yeah, it could make sense to some degree, but you measure any of these things against Bitcoin, and they do very poorly. I suspect that Brian hasn't done a great job managing their treasury. They are like a lot of VC funded startups. They're probably wasting way too much money on like ping pong tables and random massages or something like that, which honestly like would have been much better off if they just created an option pool of Bitcoin for their employees or something like that, which a company like Blockstream has done. Instead, it's all about their stock. I like it doesn't surprise me that it's gotten that high. I suspect that this will probably start off a wave of other companies maybe getting acquired or at least being in talks or something like that. I suspect that like just given like the potential buyers, it'll be probably like banks and stuff like that, and the and the people and the companies that are being bought are not going to want to be sold to banks, right? Like a lot of the people in Bitcoin didn't get into it, so they can sell out to a bank. So
Yeah.
they're going to try, but I suspect it won't really happen. But at the same time, like it will drive a lot more investment into the space and hopefully a lot more competition for Coinbase. I've heard that Kraken is raising at about a $10 billion valuation. That seems like a much more reasonable bet to me. And I suspect that they have way more in treasuries than Coinbase does. So once they go public, I'll bet you that they're going to overtake them pretty fast. But I don't
Nice.
know. That's my gut feeling.
Right. Yeah. Mark.
Yeah, I would say that I was also shocked at how little Bitcoin they hold. I mean, especially in today's age when you're seeing Square jumping in, and I mean, obviously all these public companies jumping in and buying Bitcoin, and then here you have a company who made its name off of selling Bitcoin, and they hardly hold any. So that was kind of shocking. But yeah, I mean, it's hard to say what it's worth. I mean, as Jimmy just kind of pointed out, I mean, the ratios, the valuations today are just insane. I mean, Tesla was at like 1,000 times PE or whatever. And so, I mean, I don't want to wait 1,000 years to get my money. I want to be alive, right? So I don't know where they're getting these valuations from. I think it was valued at about 8 billion in 2018. So in 2-3 years, it's gone from 8 billion to 100 billion. But I think that there's going to be massive demand for it, not because it's the best company in the world, but just because I think institutional investors are just looking for any way they can to get into the Bitcoin, maybe even the blockchain space. We've seen this. I mean, in the 2017 market, we saw companies, I think, what was it, Lipton Iced Tea, like rebranded. It was like Lipton Crypto, and all of a sudden, like things are blowing up. So I think there's an appetite for it on Wall Street. Probably a lot of them don't really know what they're getting into. And my guess is it's probably going to be pretty hot. And I don't know if it's worth it, but I guess people are going to pay it.
Yeah, I agree with all that. It's a good thing in terms of bringing more attention and investment to businesses in the space, and hopefully will give some startups access to capital at a lower, amount of equity you have to give up otherwise. So net, hopefully it's good.
If you think about that though, Brady, I would agree that it's a really good thing, right? Because there are companies that are building on Bitcoin, right? Like building Bitcoin products. And maybe at this point, it's like still hard for them to get that attention they need and to raise money. And so Coinbase is involved in lots of other coins for sure. And, a lot of people have different opinions about them. But to your point, right, they're bringing money into the space, bringing attention. And what happens is all those investors that missed out on this $100 billion IPO are like looking for the next one. And so now there's these smaller companies that are building on Bitcoin. And hopefully, I think it'll make a big difference for them.
Yeah, I agree. Although it is when you're more directly faced with the idea of buying equity in a Bitcoin company or just buying the Bitcoin, I mean, it's too obvious. Like you could think about that with any equity and you ask yourself that question. But when you're investing in a Bitcoin company, it's just like staring you right in the face. So, if I was an investor, it's a hard decision to make, which is what you want to see. You want to make it harder to invest in a company so that they can have to prove themselves and not be held up by money printing.
I think there's, there are some investors, the Warren Buffetts of the world, right? Warren Buffett would never buy gold, but he did buy a gold producing company, right? So he always said he wanted to buy companies that are actually making things, producing things, have profits. And so depending on what the fund is and what their angle is or mandates are, they need to buy productive assets. And so, buying Bitcoin is still a risk and who knows how much is going to go up in the future. And so a lot of companies maybe just need to buy productive companies. And so I think there's a need for it in the market.
No, I hear you. Someone in the chat just reminded me, and I heard this morning, that the St. Louis Fed has just stopped publishing the M2 money supply numbers. This is obviously expected, an expected kind of thing. I mean, we've been talking about this. This is how they manipulate numbers. I wouldn't be surprised if they redefined M2 or replaced it with some other measure that is completely different than what it has been. This is what they do with the CPI. Do you guys have any thoughts about this manipulation?
Well, the big one is that the M2 was discontinued and they came up with something M2SL. It's not entirely clear what the difference is.
Well, there you go.
They did change the M1 quite a bit. So now it used to be just checking accounts. Now it's also savings accounts. So you're not getting any money off your savings anyway. So they might as well, that sort of thing. So the M1 is almost at the level of M2. So they made like an M2SL and so on. No doubt that they're doing it for some reason. Whether it's nefarious or not, we'll see. But yeah, the M2 has been going up at an insane clip, for the last year. I suspect that it'll go up even more after, the stimuli that are on the way for this year and next and so on. So, this is kind of, they move kind of slow. This was probably, in the works for a little bit, and everyone's been complaining that the M2 is expanding too fast. So
there you go.
This might be putting a brake on it. I have noticed that the M2 hasn't increased that much in like the last 6 months. Whether that's credit contraction or some number fudging in the back, it's hard to tell. And maybe this change will allow them to fudge the numbers a little more or to hide what they actually did the last 6 months or something like that. But regardless, it's a government statistic. It's hard to trust. And, we in Bitcoin Verify don't trust. I suspect it's expanding pretty fast anyway.
Yeah. Mark, do you have any thoughts on this?
Yeah, I mean, I would definitely just agree with what Jimmy said. I think he said whether they're doing it for some nefarious reason or not. I think for sure it's about transparency, and so they're just trying to make it harder and harder to see. And kind of like what he said, it's government data, and it's hard to trust that. I mean, just look at the whole system is built on CPI. And so they're using CPI to measure everything. And that's like the most faulty metric in the world. I mean, they've continued to change how they calculate it. And so, we do our best, the best that we can with the tools that they give us. But yeah, they're continuing to make it harder and harder, and they just don't want that transparency. So I'm guessing that's why they did it.
So I agree with that. I'm glad to have your comments on the M2 stuff. And like I said, I'm not surprised to see it. We'll probably see more of this happening, trying to hide what's really happening as we move forward into this brave old world of fiat collapse. So I wanted to shift the conversation for the last part of this episode to talking about the morality of Bitcoin. Jimmy's just published a book called "Thank God for Bitcoin," which makes a moral case for, basically for backing Bitcoin, for spreading Bitcoin, for trying to help it be adopted and replace the dollar as the global reserve currency and basically rebuild the foundation of civilization. And I see money as a pervasive force. It's a subtle force, and it's astonishing how the downstream effects accumulate and eventually just kind of affect everything, right? So it's I think absolutely critical that we fix the money in order to fix the world. And I think I'll go even as far to say I think it's the most important problem to fix right now, because it literally affects our ability to solve every other problem we have. And I think I could say that and with accuracy and without exaggeration. So Jimmy, we'll start with you. I'd love to hear a bit about your book and how your evolution of your understanding of Bitcoin having morality and its moral impacts and outcomes.
Yeah, so we started on this book because we were frustrated with the two books on sort of like morals of money production. There's one book by Guido von Holzmann, The Ethics of Money Production, fantastic book. Honest Money by Gary North, another fantastic book. The only thing that we didn't like was the fact that the ending was all about, hey, we need to get back on the gold standard. Let's go write our politicians and get a political action committee together and, petition the Fed to go back on a gold standard and so on, which if you know anything about politics, is completely and utterly unrealistic. So for us, that was the frustrating part of those books. And like for writing this book, Thank God for Bitcoin, was all about making that argument that Bitcoin is the way to opt out of this current corrupt system, and the system is just horribly corrupt. I call it a cesspool of theft. It's all set up for rent seekers, a lot of injustice, a lot of rich people getting richer while poor people getting poorer. A whole system built just on debt. It causes all sorts of problems in politics and personal lives, even churches and organizations. All of them are up to their eyeballs in debt, and it causes a systematic fragility and a moral, a moral indifference that's actually quite shocking. And ultimately, it's ended up with a system that's caused a lot of people to become very materialistic, very political, very much, ends justify the means kind of mentality. And we think that, going towards Bitcoin will fix a lot of that. And and that's essentially what the book is about. It's the current system is corrupt, Bitcoin is different, and it'll fix a lot of these ills.
Yeah. What about you, Mark? First of all, have you come to understand Bitcoin in this way? And if so, what was your journey to get there, to think about it beyond just, the economics of it, for instance?
Yeah, well, I love to spend a lot of time thinking about the kind of socioeconomic philosophy side of things. I haven't read the book, but Jimmy, it sounds like a great book to read. But I would definitely say the exact same thing that he's saying. And I look at it like this big tree, like this big oak tree with all these leaves, and you have all these problems in the world and in society, and each one is like a little leaf, right? Where each individual little problem, whether that's incarceration rates or divorce rates or homelessness or obesity or whatever, right? And they have this big tree, but at the root, instead of like taking each leaf and trying to like solve each problem one by one, like at the very base, the root is the money. And so like, instead of trying to like take each leaf and try to like debate about each leaf, like let's just go straight to the root, like cut that thing down, right? And that's kind of where I see the money. And so, I think that every problem could be traced back to the money, one way or another, indirectly. And a lot of it just comes because, as Jimmy said, like the whole system is set up for rent seeking, right? The whole system is set up for manipulation, for people to game the system, for people to get ahead at the expense of other people, as opposed to having a fair system that everybody has the same opportunity to go through. And so, I think it was in The Road to Serfdom, they were talking about like laws and regulations. And he was basically saying how like laws are supposed to be put ahead in advance without thinking about who goes through them. And that way, whoever goes through them, it applies to them all equally. And everything that we're seeing today is all arbitrary. Everything is different depending on who you are. And now, what sex or color or race or whatever you are. But the whole system is set up like that. And it all starts with that money. And so, yeah, I mean, you fix the money, you fix the world. And I know for a lot of people who haven't spent a lot of time really thinking that through, it sounds like a big statement. And I know some no corners hate to hear that Bitcoin fixes everything. But it kind of really does. And the only way to do that, I think, kind of to Jimmy's point about that book, a lot of those books point to the gold system. And I was a gold bug in 2008 and 2009. I became very disillusioned with the financial system. But what I realized is I wasn't really a gold bug. I was really a sound money advocate. And so I think that was a little bit of a difference. And really, it's just that F.A. Hayek quote that I always hang on to, right? And we'll never have sound money until we take it out of the hands of the government, right? And so that's where we're at. And I think we'll have a fair system, a just system. Not that everybody has the same outcome, but at least everybody has the same opportunity. I think, a lot of people today, we can see the populism uprising all throughout the United States and throughout the world. People are unhappy. They're not exactly sure what it is. They know the system's rigged. They know there's a reason why they can't get ahead. And they're not sure why it is. So they're angry. A lot of people are angry at rich people, and they think it's because of income inequality. But if you think about like sports, for example, like take LeBron James, best basketball player maybe or whatever, but like nobody's mad at LeBron James because he's so much better at basketball than everybody else. And I think that's because they perceive basketballs as being a fair set of rules that everybody has to comply to the exact same rules. Whereas in society, those rich people, everybody knows they're using a totally different set of rules that everybody else, that different set of opportunities everybody else has. And so, we go back to a sound money system and take away those advantages. And I think it fixes a lot of things.
It is really astonishing. And one of those moments, like when you start realizing the downstream effects of fixing the money and how just fundamental this really is. And it's completely flipping the script. It's the opposite of the kind of money that we have now, right? And I'm seeing, some of the greatest minds in the world popping into Clubhouse, Eric Weinstein and Lex Friedman, and some of these people who are really highly regarded and in very, different aspects of the world outside of our sort of insular Bitcoin world, which is becoming less insular. And they're listening, and their minds are being blown a little bit by these ideas that money is, that fixing money will have such a massive impact on the world. And people waking up to that, I think, is really the kind of the final deal. Like if you understand that, then you're all in. You have that moral sort of obligation or mission driven approach to Bitcoin, and that's, I think, where most of us are at this point. Jimmy, you need to go grab your steak, man. Can you give us a website or URL to find your book and the rest of your work?
I have all three books on programmingbitcoin.com. And, I'm on Twitter at Jimmy Song, Medium at Jimmy Song. My newsletter is jimmysong.substack.com. My show is called Off Chain with Jimmy Song on YouTube. I have a podcast called Bitcoin Fixes This, which you can find on Anchor and on YouTube on my channel.
Jimmy is an all-star Bitcoin educator. He covers all parts of Bitcoin: the philosophy, the economics, the tech. He's a full-stack Bitcoin educator. Really appreciate your work, Jimmy. We will see you on Clubhouse here in just a little bit. Enjoy that steak. Mark,
Thanks.
Mark, thanks for being here, man. Tell us a little bit more about your work and where we can find you, man.
I wanted to ask Jimmy how much butter he puts on that steak. I love to put butter on my steak. So I'm mostly just on YouTube. You can just find Mark Moss on YouTube. I'm pretty active on Twitter as well, which is the #1 Mark Moss. And so, like I said, I thought I was a gold bug. I really just found out that I was actually a sound money advocate. And so I spend most of my time just talking about that. And to make it super simple, like fiat money bad, sound money good. So a lot of time talking about the Fed reserve policies, runaway stimulus, et cetera, and how bad that is. And then of course, on the other side, the solutions that we have for that, which of course always go back to getting our money out of the banking system and having a sound money again. So if you like those topics, follow me on YouTube and Twitter.
Thank you so much, Mark. Appreciate it. I'll let you take a quick break as well, and we'll see you over on Clubhouse here in just a little bit for the post-show Q&A. Thanks for your time, man.
Cool. See you
all
there.
right. Yep. And thank you, everyone, for being here, watching, listening, wherever you are. We do this every Tuesday here at youtube.com/swansignal. We do it on Twitter at Swan Bitcoin. We're on Facebook. We're on Twitch. And we're on Clubhouse live simulcasting this as well. So 5 locations where you can find this show. If you prefer the audio archive in your podcast app, check out swansignalpodcast.com. We have another show that we do every Friday called Swan Lounge on this YouTube channel. It's a hangout, more informal. Bring in some Bitcoin friends and just hang out and talk about the week and tell stories. It always ends up being a fun and entertaining conversation. So subscribe to this channel if you are into getting some great Bitcoin content and some fun Bitcoin content for that matter as well. Go ahead and like this video as well, please, to help us spread it around YouTube. And if you're not yet already stacking with Swan, please get over to swanbitcoin.com and check us out. Give us a shot. We make it super simple for you to just set up automatic recurring buys. Think about it like paying yourself in Bitcoin. It's what any auto stacking service does. So just figure out whatever amount you need to pay your fiat bills and figure out the amount that you want to save in Bitcoin or pay yourself in Bitcoin every month, and just set that up as a weekly buy or a daily buy or a monthly buy on Swan. And your paycheck will automatically be converted, that percentage of it, into Bitcoin and stashed in your Swan account. We do support automatic withdrawals. We have no withdrawal fees, no withdrawal limits. You can withdraw all your Bitcoin at any given time, which is something that a lot of other exchanges don't do, and people will find out and be frustrated with when you go to withdraw your Bitcoin. Not at Swan. Automatic withdrawals are awesome. Our friend Gigi coded that up for everyone. You can add an XPub as well to, if you're withdrawing to a single key wallet, you can add your XPub there, and we'll generate about 500 addresses, put them in our database so we don't store your XPub or even take your XPub over the internet. So it's as safe as we can possibly implement this XPub support, so you get a fresh address on every withdrawal automatically, set it and forget it. There's just one click to verify your withdrawals in your email, and that's it. That's as simple as we could make it. And of course, you can manual withdraw, put new fresh addresses in there, withdraw to your multi-sig account or something. So really trying to follow Bitcoin best practices for all of the Bitcoiners out there. This is a company run by Bitcoiners for Bitcoiners, and trying to do the best we can to spread Bitcoin knowledge and awareness and use in the best way possible. I also mentioned at the top, Swan Private. We spent a lot of time in this episode talking about Bitcoin being adopted as corporate reserve assets, and high net worth individuals and people saving money for their children, et cetera, and trusts. All of that can be done with Swan Private at swanbitcoin.com/private. Swan Private is international. All right. So if you're looking to buy over $100,000 in Bitcoin in the next 12 months, you're eligible to go through Swan Private, and that can happen anywhere in the world, wherever you are. We are onboarding international businesses and individuals regularly. So really excited to be able to work with anyone in the world at this point who is looking to stack that amount of sats. We also have a new site that was just launched, bitcoinerjobs.co. bitcoinerjobs.co. Our founder, Corey Clipston, worked with another Bitcoiner whose name is escaping me. Brecky, ping me in the chat if you remember who this was, but helped put together this site super quickly. And these are Bitcoin-only companies, jobs at Bitcoin-only companies. It's a great place to find, a way to get into the industry. There's just building this budding sort of Bitcoin-only industry that we're seeing come to fruition here. And as we were talking about in the episode, I think will accelerate as we get more investors' eyes on this space. And the Coinbase IPO will be something that will kind of bring that spotlight to the sector. And there will be more Bitcoin only jobs out there, Bitcoin jobs at Bitcoin only companies. So you have been building your resume by, posting and on Twitter and, reading and understanding this thing and what's going on. Continue to put stuff out there, and you'll make a name, make a name for yourself, get noticed, and then get hired by these Bitcoin companies. You can find all of those jobs at bitcoinerjobs.co. And don't forget, we are moving over to Clubhouse here in just a moment. So if you're listening on Clubhouse, we'll be there with you soon. And if you are listening or watching elsewhere, hop on to your phone, your iPhone, and open up the Clubhouse app and come join us. You'll find us in the Cafe Bitcoin room, one of the Cafe Bitcoin rooms. That club has grown to, I think, over 60,000 followers now and members combined. So it's really exciting to see that club growing, and there's usually a Cafe Bitcoin room going at pretty much every hour of the day at this point. So come join us on there and pop in and ask Mark and Jimmy some questions that you may have thought of during this episode. And join us again next week for Swan Signal Live on Tuesday. We'll see you then. Take care, everyone.
Have to, go with the stuff that, our ancestors ate, which was mostly meat, and maybe some berries here and there if you really need to. But meat is the source of energy that most of our ancestors used, and vegetables are actually very, bad for you in many ways. Don't give you that much energy, and you'll essentially be malnourished if you eat them. So that would mostly be my argument there. Bad for you in many ways. Don't give you that much energy.
I don't know, but I haven't studied it closely, but it definitely sounds delicious. So I'm gonna go ahead and go out there and be like, yeah, I would be down with that. I think I could get behind carnivory. Did you, like, when you made the switch over, did you get tired of meat for a while? Did you have to like push through some kind of barrier?
For some people, there's palate fatigue. I really like steak, so I didn't really have that much of that. But yeah, I mean, for some people, that's something that they get. Particularly, I've noticed that more in women than men. They get palate fatigue, and they're like, oh man, I wish I could eat something else. But at least for me, it wasn't that bad. And if you're coming from keto, it's just cutting out fruits and mostly vegetables, which most keto people don't like eating that much of anyway. So it ends up being just sort of like, okay, well, just cutting out even more stuff. That's not a bad thing.
Jimmy, do I have to cut out dairy also? I'm on keto now.
Yeah, I cut out dairy mostly to see how my body reacts, and I do feel a little better. So I, depending on like what, race you are and where your ancestors came from, if they didn't really raise cows for milk, then you're probably going to have some lactose sensitivity, if not outright lactose intolerance. So I suspect that's the case with my ancestors. So I've more or less cut out most dairy. So, I mean, depending on where your ancestors are from, that might not be an issue.
Well, in the chat earlier, Pardis BTC, he runs btcpins.com, had a great line, is outsource your plant digestion to cows, which I love looking at it.
Yep, that's a very good one. And like one of the things that Sean Baker points out is that the animals that actually process like grass and vegetables and things like that, they actually have very different digestive systems. So a cow, for example, has 4 stomachs and chews for 18 hours a day. And this is what's needed in order to turn very fibrous grass into energy. Obviously, we don't have 4 stomachs, and we don't chew for 18 hours a day or re-chew for 18 hours a day or whatever, which indicates that our bodies don't really turn them into energy per se. It's just like something that will tolerate when there's no good meat around. So I think that's that's something to explore, definitely. If you haven't thought about it or read about it, it's worth taking a look at.
Cool. All right. Well, let's dive into some Q&A. Questions are open to the floor. So if you have a question for Mark or Jimmy, especially if you had one that was peaked by the episode itself, that'd be ideal. We got somebody here. Daniel is going to take the first crack at it. Go ahead and raise your hands and we'll build up a queue. What's up, Daniel?
Hey, how's it going? I'll make it quick. Mark, I've been following you since the days of Boyce Watkins, and I've been following you recently on the YouTube. How is Puerto Rico going? I know it's probably off base, but I'm just wondering, how's the Puerto Rico move going?
Yeah, well, it's not off base, right? I built my kind of investing career off of a theory that says go where your money's treated best, and now I'm living my life like go where I'm being treated best. And so, I came over to Puerto Rico January 1st, and man, so far so good. There's a little bit of getting used to. Mainly, Amazon doesn't deliver overnight. Now it takes about 2 weeks. But other than that, everything's about the same. You have all the kind of big box American stores that you would need. The weather is absolutely amazing, and come tax return time next year, it's going to be a very happy day for me. So overall, I would say it's been a pretty good move. And for anybody looking to go where maybe their money or themselves are treated better, it's definitely something you should consider.
How much do you hate the Jones Act right now?
What's the Jones Act?
Everyone from Puerto Rico seems to complain about it. Yeah, I'm sure you'll find out soon enough.
Yeah, I've only been here for 2 months, so maybe I don't know about that yet.
Well, were you able to work out the banking situations? You say banking was a little bit odd because
So that's a real good story. I'll go through really quickly, but just to show you, I know we're on a Bitcoin Clubhouse room at this point. So anyone who's into Bitcoin and then has to interact with the legacy banking system realizes how bad it is and how dead they are, right? And so I moved over to Puerto Rico. I hired one of the best tax law firms in the country. They did all my stuff. They gave me a concierge banker inside the bank, so somebody inside that like rushed me through the banking system. I'm a known person at my bank at Wells Fargo in the U.S. I'm a high value client. I have a long-term banking history, all these things, right? And it took me 26 days to get a bank account opened. And as of today, which is March 2nd, I still don't have access to my account, meaning money's been going in and I don't have online access. I don't have a debit card or checks for my account. And it's 3/2 now. So 26 days before the account was even open. And 2 months in, I still can't even access it. And so the point is it's permissioned, right? I have to get permission. There was like 100 questions I had to answer over and over, 24 forms, all these things. And so Bitcoin is open. It's permissionless, right? Anybody can download a wallet, interact on the network. And so anyway, yeah, that's the problem.
Okay, thank you.
Thanks, Daniel. Appreciate it, man. Who else has questions? Don't be shy. Raise your hand. Jimmy and Mark have lots of insights to answer whatever question you have. Don't be intimidated. It can be a newbie question. We are happy to talk about Bitcoin and help you on your journey. And if no one wants to go next, here's the taker. All right. What's up, Brian?
Oh, hey, I could ask now.
Yes, hello, Brian. What's going on, man?
So I wanted to get your guys' thoughts on this. A guy named Novell tweeted that just wait until the narrative industrial complex goes after Bitcoin. And I don't know, just watching the society just the past year and sort of like watching the media's lock on sort of like the ignorant masses and their ability to sort of, make them believe whatever they can believe. I'm just wondering, how do you see that sort of like being weaponized against Bitcoiners? What kind of narratives do you see, and how do we defend against that?
Was that the narrative industrial complex? Is that what you said?
Yeah, that's what I said.
Narrative. Yeah. So, I mean, I guess FUD, right? All the stories that bring fear, uncertainty, and doubt. And so no doubt they've been using those since as long as I've been in the space, whether that's China shutting it down or whatever it may be. We're seeing those FUD articles are starting to come a little bit faster and furious. I think the Tether one, I can't believe how big that whole Tether piece became, and now that's kind of been put to bed. And now it's going to be a climate change. And that's the next one we're going to have to get over. But to your point, I think, anytime you have a big institution or hedge fund or whoever, right, they're going to short a company. They're going to try to do whatever they can, including manipulating the media to like try to damage that. And so anybody who's against Bitcoin would probably try to use narratives to bring it down. And Bitcoiners, we use memes. And I think Bitstein called it meme warfare, right? And so we use memes to push our side. They're using their narratives and their traditional media to push their side. And I think that's how battles are kind of fought now over information.
Do you think violence will be sort of used against like us or anything like that? Or do you think it would just be sort of like intellectual debates and people will come to a rational kind of, enlightened conclusion?
I'm hoping for a peaceful revolution. I think where we just opt out, right? We vote with our feet, kind of like the question I answered before. Like I voted with my feet. I left California, came to Puerto Rico. And so I think we just, peacefully take our money out of the bank and go into Bitcoin. I don't see any reason why there would be any violence. I guess the violence would come at the hands of the state, who has a monopoly on violence, where, if I don't see this as a possibility, so I'm not trying to predict the future, but, violence in a sense where if somebody was trying to get your Bitcoin from you, of course, they don't have your key. And so they would threaten you with violence if they were trying to steal from you. But that's not unique to Bitcoin. If someone was trying to steal from you, anything from you, they would threaten you with violence. So maybe violence in that regard, but it's not something that I'm really spending time worrying about.
Thank you.
The narrative industrial complex. Did you say that was Naval Ravikant that said that?
Yeah.
Yeah, that sounds like a Navalism. I like it. And we did get into this on the show a bit, talking about big corporations banding together and putting together those narratives and trying to put as much power behind them as they can to accomplish whatever ends they have in terms of affecting Bitcoin. And yeah, I think it'll get hot and heavy, and they're going to come after us. But I think we've seen the scripts, right? We've seen all of the types of FUD that are out there, the arguments that'll be made. I think they might just have a louder microphone. But I think Bitcoin's done a pretty good job of being immune to them so far.
Yeah, and I think really you beat bad information with having good information. And so, right, it's through a process of like educating yourself, and to the point where you have built conviction. And so when you understand it, when you have conviction about it, then you can weather those FUD storms, right? So you can weather that misinformation campaign, and then really that presents the opportunity. And so like when maybe the Tether news was coming out in the last couple of months, and people say it's hurting the market. Well, for people that know that that's just a bunch of nonsense, that gives us a buying opportunity, and we can buy into that. And so I would say, if that's something that you're worried about, and I guess like I said, that misinformation will probably only accelerate moving forward. I mean, the key to protecting ourselves from that is just being educated and having conviction. And I think I heard it said before that volatility is the difference between perception and reality. And so the reality is kind of this constant, but the perception, sometimes they perceive more than what the value is or less. And so that news cycle, that FUD definitely plays into that.
I have a question. So I don't mean to.
Hey, Greg,
I have a question too there, Greg.
Yeah. Hey, Greg, just one sec, man. We're going to go Johnny. Okay, we're going to go Johnny, then James, then you, Greg. Go ahead, Johnny.
Okay, I think Francesco, if he has a question, I think he's before me. But
I have not been able to see Francesco. Oh, there you are. What's going on, man? For some reason, I kept bringing you up, and then I never saw you up here, but I refreshed, and there you are. So, yeah, go ahead.
So I'm in Bitcoin from 2014, and I do some open source wallet libraries development, and I'm generally a Bitcoin maximalist. But then I saw MakerDAO DAI in Ethereum, and I want to know what you guys think about it. Like, is that the first real good use case for Ethereum? Like something that you can build on Bitcoin?
DAI is an algorithmic stablecoin, and the way it works, the way they peg it to the dollar, is that they have a large amount of DAI and dollars on some exchange, and whenever it goes too low, they buy it so that the price goes up. Whenever it gets too high, they sell it, and then the price goes back to $1. If that sounds familiar, this is exactly what central banks do when their currency gets out of the peg range of the US dollar. They buy when it's too low, sell when it's too high. The problem is this is setting itself up for some catastrophe, right? At some point they run out of dollars, and then it drops like a stone. And this has happened to many different central banks all throughout the world. It's algorithmic in the sense that it's not actually backed by US dollars. It's just sort of like managed using whatever assets that they have. I don't think it's actually innovative. It's just a copy of the fiat central banking system. And that to me is, like kind of how it works. I don't see it as an innovation. That said, there are things that are more or less like stable coins on Bitcoin. There's something called the contract for difference that you could do with discrete log contracts. It depends on somebody taking the other side of the trade and so on. But essentially, you can store dollars on the Bitcoin blockchain, assuming that your counterparty exists and so on. So I wouldn't say that it's really an innovation as much as it is just sort of copying what the central banks are.
Thank you.
right,
Cool.
Go
Sorry,
ahead,
I'm
Johnny.
gonna interrupt. Yeah, so I think this is a question for Jimmy. I read Thank God for Bitcoin. I need to reread Thank God for Bitcoin. I'd say I was a self-described atheist for most of my life, and that probably came from a certain degree of nihilism. But the last few years, discovering Bitcoin has turned me more into an optimist for the future, and I'm exploring now sort of the philosophy and the relationship to God and Bitcoin. And I'm looking for resources. I just listened to John Ballas's and Robert Breedlove's conversation about Jordan Peterson's book last week, which I thought was fascinating. I want to go farther down that part of the rabbit hole, and I'm just curious if anybody has lists of good resources, podcast, books, whatever you have to name.
Yeah, that's a great question. For me, if you're on that journey, the first place to look is the original source, right? And that, for Christianity at least, is the Bible. I don't know if you read it as an atheist, but it's at least for me like a good place to start. There's a lot of commentary on stuff that's confusing, and I would encourage you to go and talk to other people that you respect, that are Christians or have a different point of view than you might have had previously, but are curious about. There's a study for Thank God for Bitcoin that's happening on Zoom. If you're interested, I'm sure you can get in there, and they just sort of talk about each chapter and how it applies, and they go down different rabbit holes and so on. That might also be an excellent place for you to go. And there's a Thank God for Bitcoin group on Telegram where that Zoom link is posted and so on. So if you join that, you can get access. Is that enough?
Yeah, that's great. I appreciate it, Jimmy. Thank you.
Yeah, it sounds like you found the right entries into that rabbit hole. John Vallis and Robert Breedlove, Alan Farrington, Gigi, Friar Haas on Twitter, Haas McCook, have all explored kind of these ideas, the philosophies of Bitcoin, and get a little deeper. And we talked in the show today about the moral implications of Bitcoin and how a lot of us, once we realize that, feel this moral obligation, whether that's secular or religious or however we experience it. It's, we're sort of united in the idea that this is a good thing for the world and for individuals, and we feel compelled to share it and teach about it. So awesome to hear that you're on that path, Johnny.
Yeah, totally agree. It goes deep. Thanks.
Yeah, thank you, man. Greg, you're up next, and then James. What's up, Greg?
For sure. Well, I'm happy to hear about Johnny if he's still in here. I'm a newborn believer myself. But I wanted to ask you guys a question, and for anybody. So when I've been in crypto 2016, have a finance background, and when I look at this landscape going forward, I think everybody in here knows that CBDCs are coming. Some of them are already here, but they will be at the forefront of this next revolution or landscape in the future. And I'm curious what you guys think as far as how that interaction goes with stablecoins specifically. I don't think as much with Bitcoin, because I think we're starting to see, especially in the US, regulatory framework being built around Bitcoin, it being generally accepted. But I'm curious what you guys think as far as how that relationship's going to play out between the CBDCs and a lot of these stable coins going forward.
Well, I would say that I think that overall it'll end up being a positive for Bitcoin. I think what it will do is a couple of things. First off, I think it will bring some legitimacy to the digital coin space, if you want to call it that, to the cryptocurrency space or whatever. So there's still a lot of skeptics who believe that, if I can't hold it in my hand, it's not real and all these things, even though we live in a digital world today. All those people who still think that digital money can't be real, all of a sudden, when now the dollar is a digital currency, are going to start to have legitimacy there. The other thing I think that's going to do is it's going to have a glaring contrast between the CBDC and Bitcoin. And so all of a sudden, they're going to have this kind of new realization of it, that it's a legit type of currency or whatever, and maybe even start using it and kind of maybe have like a gateway, right? Where all of a sudden now they were forced to download an app and now they're actually using it. And then all of a sudden now they're seeing it compared to Bitcoin and going, why is this one always going down and this one's always going up? And I think that will then maybe trigger a little bit of the kind of rabbit hole on their own, where they start digging in and going, what's the differences here? And then when they start to learn the differences, that a central bank digital currency is not only like fiat, where it can be completely manipulated and controlled. On top of it, it's complete surveillance. It's programmable. So now they can basically give it to me and take it away as they wish. It's behavioral, meaning they can say, hey, you're saving too much. You have a negative 5% rate. Oh, you don't save enough. You're positive 5% rate. And like they can do all these things, manipulate, control these things. And yet Bitcoin is over here and it can't be manipulated. I was talking earlier about the problems having a Puerto Rican bank account. Bitcoin is open. It's permissionless, whereas the central bank digital currency is going to be closed and permissioned. And so I think it'll bring legitimacy to it. I think it'll bring attention to it. It'll show the glaring differences. And I think people will naturally try to gravitate over towards it.
I guess
well, here, like, can I take an attempt at a crack at your question? Because I think
yeah,
right.
I'm talking direct competition.
Yeah, about stablecoin. Yeah. All right. So if you look at what CBDCs actually do, they're really an attempt to sort of cut out the middleman, and these are all of the banks that go under the central bank. So if you have a central bank digital currency, essentially everyone just has an account with the central bank, and you don't need commercial banks, you don't need retail banks. You just have everyone with an account with the central bank, and that's it. You don't need to worry about bank interoperability or like transferring money between banks and all that. You just settle with that central bank digital currency, and that is it. Now, if we beam this out a little bit, what does that mean for stablecoin? So probably the first country that's going to try a CBDC is China. If China had some sort of stablecoin, say the digital yuan or something like that, and more or less WeChat operates that way. Well, what do they need to do? They need to back their currency, back the stablecoin with reserves, and that has to sit in a bank. But if you've taken out all of the middle banks, right? All of the commercial banks, all of the the banks, the residential banks, and all that stuff. What ends up happening is, well, you now need to have an account with the central bank in order to issue your stablecoin. At that point, if the central bank wants to and says, you know what, your competition, I'm going to take it away. Well, do they have any recourse? Not really. Unless they figure out some other synthetic way to do it, or to use somebody else's name, or many shell games or whatever. But they're particularly vulnerable to having their reserves taken away, or financial access denied. And the government, the central bank, can basically say, hey, this is how it is. And if you want to use a digital currency, you're going to have to use either our coin or some algorithmic stablecoin or something else, but you're not going to have a fully backed stablecoin unless it is our currency, because we want to control it. And if you do something that we don't like, then we can shut it down. So I think that's the end game for a lot of these stablecoins, is that they kind of have to go away, or they will be easily sort of like regulated out of existence through the issuance of the central bank digital currency, because in a sense, it's competition. Now, if you're in the United States and stuff, I don't know if CBDCs are in our future because banks have so much power. But in a place like China, where it is an authoritarian government, that's entirely possible. And you will have your bank. Every individual will have a bank account with the central bank. That way they can take away money or give money as necessary. If you abscond on your taxes or something like that, they'll just take it out of your account and whatnot. I think that's the role that CBDCs are meaning to play. I don't know if it really affects Bitcoin, other than it'll make it more popular and so on. But ultimately, for stable coins, and I think your question is very perceptive in that regard, is competition. And the central bank has the means by which to shut that competition down. As a result, I think stable coins, at least the backed ones in the currencies that are directly proportional to the CBDC, those go away.
For sure. Thank you both for your answers.
Let me add on to that. So as far as China's what they're calling a DCEP, but basically same thing, digital currency. I mean, they rolled that out last year, August, and then October again. And their plans are to have it fully tested and fully operable by the 2022 Winter Olympics in Beijing. So they're looking to have that fully up and running by then. So they're already running it. I think they have a $1.5 million test that they're doing with that right now. And I think kind of to Jimmy's point, I mean, it's definitely going to be used as that tool for more control. I see it. I mean, if we really want to game plan this out, kind of what Jimmy was saying, we have like the way the banking system works. I mean, you have like the Federal Reserve of the central bank, who then gives reserves to the commercial banks, and then they create the money through lending, right? And then we have like our local banks, and then like our bigger banks or national banks, the commercial banks, right? And then central bank. So there's kind of like this stack, and it's kind of like this decentralized banking system. And so like are never going to work in this local area. I'm not going to give you a loan. So there's like local knowledge, and they can basically just compress that whole stack where the central bank can give the credits directly to me through a central bank digital currency and kind of get rid of that stack. Now, kind of to Jimmy's point, maybe the banks have too much power and they're going to fight back on that. But I think there's a way that they're going to want to compress that stack. And then it's kind of like right now where you have money or really like currency that you could actually have, right? You could store in your mattress or into your safe. But this wouldn't even be like money that you would ever actually have. It's almost like just credits on a central bank ledger, right? And they could just give you credits and take credits away at will. And so I think we'll probably see them try to compress that stack, and then eventually, I mean, it might just be credits directly from the IMF, right, through their SDR baskets, and then they can get rid of that whole stack, bypassing government, central banks, commercial banks, the whole stack. And so we'll have to see how far that goes.
For sure, definitely worrisome, depending on how you look at it playing out.
All right, great conversation. Thanks, guys. James, have you had your question in yet?
No. I have a quick question. Yeah, so I was on a phone call with a friend of mine, and he made a comment that I just wanted to get some...
James. Sorry.
Okay.
1 second. Sorry about that. Lamar, what's up, man? Welcome to the room. This is Lamar Wilson. He's founder of the Black Bitcoin Billionaires on the Clubhouse here. So he's going to jump on stage, maybe mix it up a little bit. Just wanted to welcome him.
Hey, what's going on? What's going on? Yeah, I was just hopping on stage, man, because I was gonna ask Mark, whatever happened to Jarvis, man?
Yeah, I don't know. That was a project I worked on with somebody back in 2017. I stopped working on that project back in 2017. I'm not exactly sure what happened with it after that point.
Yeah, because it really was a humdinger, huh?
I'm not sure I understand humdinger, but yeah, so that was a project. I'm not sure what they ended up doing with that after that point.
Yeah, I just really wanted to know because some people in the Black Bitcoin Billionaires was asking about it because of everything that went down. But yeah, I just wanted to know. So thanks, man. I appreciate that.
Yeah, there was I think it was called the Black Business School, I think in 2017, and they had me come on and help them. At the time, it was cryptocurrency. I was still in the crypto space as opposed to just being a Bitcoiner. And so, yeah, I did a lot of work with them back then, but some things kind of fell apart inside their own community, and I stopped working with them in 2017. And so, yeah, I'm not sure what happened with it after that point.
Okay, yeah. Because I remember it was supposed to be some kind of AI thing that was picking stocks and cryptos, and I don't know if it ever really matriculated or anything like that, but a lot of people spent a lot of money on it because they thought that was what's going to happen. You feel me?
Yeah, I mean, so obviously you know what happened, right? So that's with Boyce's whole program. So I think he's still running a pretty big business. So I'm sure if there's any problems there, they could talk to him about that.
Yeah, okay. Yeah, that's all. I just wanted to ask. Well, I appreciate it, man. I appreciate you answering that for me.
Sure.
Cool. Thanks, Amar. If you want to hang out, answer some Bitcoin questions with us, you're welcome to. James, sorry to interrupt.
Oh, for sure.
No worries. Yeah, just had a question. I was on a phone call with a friend and he mentioned something and I wanted to get some clarification on how much truth there is to this and how I should be thinking about it. He mentioned like, yeah, I can't stand, the big guys holding the price down. I go, what are you talking about? Who holds Bitcoin price down? He goes, well, like look at this firm called F2 Pool and some miners. I said, well, why would they want to keep the price down? So I wanted to get some understanding and clarification. And then my second part to that question is there like a supply demand curve where at a certain point or a price of Bitcoin, the miners have more or less incentive to actually have more competition come in?
No business likes having competition. So, yeah, I mean, there is a theory about how miners essentially control the market. And the theory basically goes that during bear markets, they accumulate tons of Bitcoin and take out loans or whatever. And then as the bull market ramps up and things kind of get heated and we get into a bubble, they dump at the top. So all of the Bitcoin that they've accumulated, they finally sell, pay off all their debts, make the price go down. And the purpose of doing that is to bankrupt all of the new mining companies that are coming in. And it's not very different than, say, the oil industry. This is what the Saudis did to all the fracking companies in the United States. They let the price get high enough. All these fracking companies started because they were like, well, as long as oil is above $60 per barrel, we'll make money. And then they just crashed the market by supplying way more oil. All those companies just went down and they couldn't make a profit anymore. They went bankrupt. We think that Bitcoin miners may be doing something similar. When as the price goes up, there's always new, mining consortiums or new pools or new silicon that's going to be made or whatever. There's always announcements about that. And as they raise money and all that, and then right at the top they sell, and then they can no longer find investment, or even if they've already invested, they're no longer profitable and so on, and they sort of crash. So that dynamic may be what your friend is talking about, is that by keeping the price low, you keep out competition, and you keep the hash rate down, because at a certain point, a lot more hash power comes online. And if they suppress the price, then they can continue in their accumulation mode because maybe they don't feel like they have enough dry powder for the big dump that they're planning or something like that. So that could be one thing, but it's all speculation. We don't really know, but that would be my best guess.
Okay, thank you for that.
Good question. Mark, did you have anything to say on that front?
No.
Yeah, okay. All right, anybody else have questions? Please feel free to raise your hand. I know we've had some new people pop into the room. This is a Q&A session following a Swan Signal live interview or podcast with Jimmy Song and Mark Moss. Jimmy's a full stack Bitcoin educator. I think he's really, really close to 10,000 followers on Clubhouse. So let's push him over the top there. Give him a follow. He's been around a long time. He's written books. He teaches courses on Bitcoin development. He's become an Austrian economics expert. He's got his finger on the pulse of the Bitcoin business scene, of the macro climate. So Jimmy does a little bit of everything. Definitely a good follow. Mark is a rising star on YouTube, finance, investing, and just living your life to its fullest in general, and really focusing a lot more on Bitcoin lately too. So that's youtube.com/Mark Moss. And all right, we have a question here. Please raise your hand and we'll bring people up on stage and make a line. What's up, Davey? You're on stage.
Hey, thanks for letting me ask a question. Mark, I was wondering, what do you think is going to happen with the real estate market? I mean, and with interest rates? I mean, I'm looking to buy a house and maybe take a loan against some of my Bitcoin in order to do that. And I'm wondering what's your feeling on the timing of doing that? Prices still seem really high to me right now.
Well, we're on a Bitcoin room, and so I would say that I sold one of my apartment buildings in December, and I put it all into Bitcoin. So that kind of, not what I say, it's what I do. So I'll give you that. What I would say overall is that there's no such thing as a market, right? There's thousands of sub-markets broken down by area, location, price, type, etc. And so to say what's going to happen with the market, it's not really the right question to ask. Everything, Bitcoin and everything else in the world is driven by scarcity, by supply and demand. And so just like there's only 21 million Bitcoin and there's 46 million millionaires in the US, or I'm sorry, in the world, real estate's no different, right? Where people are fleeing, let's say New York City, and prices are down 50%, but they're flocking to Buffalo, New York, which is in the same state, but prices are up 105%. And so supply and demand is always going to win out. You know, who knows what the Fed is going to do? The Fed is proving to do the best marketing for Bitcoin of anybody, and they're printing trillions of dollars. They've said they're going to do whatever it takes to save the economy, or I should say prop up the economy. And so I think they're going to prop up the stock market. I think they're going to prop up the real estate market. They need them both to be up for GDP. Otherwise, our debt to GDP could be 250% or something crazy like that. And so I think overall, I think the Fed is going to probably do what they can to save that market. I think some areas are probably going to stay flat, and some areas, you know, Florida, for example, and Texas are big beneficiaries of people leaving California and New York. So I'd look very regional. I would try to follow supply and demand. And if you have a chance to lock in a 2.3% mortgage today with about a 10% inflation rate, I would say probably go ahead and do that.
Thank you.
All right, thanks, Davey, for the question. We also have Lamar up here, Lamar Wilson. He is an entrepreneur, a Bitcoiner. He's been around for a long time. And so just want to have him up here. Glad to have him up here too to hang out. Davey, thanks for your question, man. I'm going to move you back to the audience. Joe, you're up next. And please do raise your hand if you have a question. We'll move through as many as we can. Go ahead, Joe. And Joe, you're still on mute, or you are on mute, or you may not be here.
Can you hear me now?
Yeah.
Hello.
Gotcha.
Okay. My question is, sorry, I'm at the gym running. GBTC, what's your thought process on that, especially when it's trading at a discount with no transaction fees to buy it?
Good question. Good question. Who wants to take a stab at that? Jimmy, Mark, Lamar?
I'll take a stab. So GBTC has a 2% management fee per year. And I think that's finally getting priced in because you have alternative ETFs that are based out of Canada that are taking 0.75%. And, you know, it's going to trade at a discount to Bitcoin in part because of that management fee. There's also no conversion. So you can't convert GBTC shares to Bitcoin, to real Bitcoin. It's what you would call a one-way street. You can only put Bitcoin into GBTC and get shares out of it, and that's a 6-month process. But you can't go the other way. So I don't know. Maybe there's some market sentiment that they may be rehypothecating some of these shares eventually, in which case a discount would be appropriate. But mostly, I think it's the 2% management fee, which is higher than the Canadian ETFs that are now trading, and you can go get those. That said, during bull runs, typically the premium gets to be higher. We are not in the middle of the bull run quite yet. We're at the beginning, so it may get higher, but I don't know. It seems like a lot more people are getting educated about what Bitcoin is and where you can buy it for cheaper than you can on GBTC. So you know, places like this where people are finding this out, they're like, hey, why am I holding GBTC? I can go hold real Bitcoin. I think that's where all of that is coming from.
Real quick, another question tied to that is, with tax structure, you know, not knowing how the IRS is going to tax down the road, GBT makes it a little bit simple, and the Canadian ETFs are trading at a mega premium. So I don't, just a little distrust when you start moving 50, 100 grand over to a wallet when you're still kind of new to it.
Fair enough. You can there are sort of like self-directed IRAs that you can do, and you can custody your own Bitcoin and do things like that. So that might be another option that people are moving to. There's also MicroStrategy, which is sort of like mostly Bitcoin at this point and some business. So if you want some, there are alternatives, in other words, and the demand for GBTC is probably dampened by all of those things.
Got it. Thank you.
All right. Thanks so much, Joe. Sam, you're up next.
Hey, thank you. Jimmy, I just heard you on the Bitcoin podcast. Loved it. And just joined Swan, Brady. But basically, my question is like, everyone wants to be able to predict the market. Obviously, we can't. But in general, how do you see this bull run being different or behaving differently than the last one did, due to like this influx of like different kinds of money and different kinds of people and much more of them being in the market?
Yeah, there's a few things that come to mind. The first one is that you know, there isn't as much narrative around altcoins that they're competition for Bitcoin. It's more like almost all of them have conceded that Bitcoin is digital gold and that they're doing something else. It used to be, oh, Ethereum's going to flip in Bitcoin. Oh, Bitcoin Cash is going to flip in Bitcoin. Oh, you know, Ripple is going to flip in Bitcoin and all that. Those narratives are more or less gone this cycle. And I think it speaks to the dominance that Bitcoin has and the recognition by all of these altcoins that they're not going to be able to compete on that level, and they have to go to another market completely. This is why you're hearing so much stuff about NFTs or DeFi or whatever. They have to have a different narrative than store of value, because they know that Bitcoin is it in terms of store of value. They're not going to beat it. You need credible long-term scarcity. Bitcoin has it. They don't. And you know, you're going to choose Bitcoin, 100 times out of 100 on that criteria. So they're trying something else, and that's one part that's different. The other part that's different is that we're starting to see some speculative attacks against the dollar, and this is this is how I would characterize Michael Saylor's convertible note offering to the bond market. It's all of that money that got invested in his more or less got printed, right? Like it's leveraged or whatever, and all those bond holders made out great. But you know, what does that actually hurt? It actually hurts the dollar, because more money is flowing into Bitcoin through this process of, you know, debt creation, which is another form of monetary expansion. So that's not something, I mean, people were doing stuff like, you know, taking out a mortgage to put money into Bitcoin or whatever, but not at the scale that we're seeing now. And, we did hear about Twitter doing a convertible note offering. We don't know if that's to put money into Bitcoin or something like that, but something is going to happen with that. And I expect more companies to put money, put more of their treasuries in. So we're seeing this movement away from the dollar into Bitcoin on this cycle. That's at a scale that we haven't seen before. And how that affects things, I don't know. But it's definitely different than 2017 in that regard.
Awesome, thank you.
I would add on to that too, that I think we've also seen a big shift in the market as far as the participants go. And so, you know, what was unique about Bitcoin is that it was really led by retail, by individual people, as opposed to having like institutions coming in. And so 2017 was just the retail boom. And so you had people, mostly speculators, coming in trying to get rich. And so, and then a lot of those people jump in typically at the top. That's, you know, when prices get really frothy at the top, it sucks everybody in. But those people don't have a lot of conviction when they bought, and so they bought to, to make money, and if it goes down, they sell. And so that leads to extra volatility, both on the upside and the downside. Whereas today, with the big institutional buy-ins, the Michael Saylors, I mean, we had Mass Mutual, the oldest insurance company, buy in, right? And so those companies, they don't buy in for like a couple days or a couple weeks. They don't have like weak hands. Those types of investors buy and they hold for a long period of time. And so I think that's going to really like smooth that out as well.
Awesome. Thank you. That's all I got. So whoever's next.
Thank you very much. Appreciate your question. William, you're up next.
Hey guys, I'm a big fan of you all. Yeah. I was just wanted to bring up the topic of capital controls. I think Mark probably went over this in some of his videos. I was just wondering if you think, like in a place like China, they have this already, obviously, and there's capital flight to Hong Kong, I believe. I'm not sure if that's still the case, but I was wondering if you think this actually increases the demand for a product like BTC, or you think it hurts it? Thanks.
Do capital controls hurt or increase it?
Yeah.
Yeah. So capital controls are basically what every dying empire does. So you expand, and then what happens is as you start dying, you go into kind of protection mode. And so capital controls are a way to kind of lock that capital in the country so it doesn't flee. So you have a currency that's hyperinflating or just inflating crazy. People obviously would want to get out of that currency and put it into something that would hold better. And so what a government would do is then lock it down, control that capital so you can't get out of it. And so in my opinion, anything they do to ban Bitcoin or make it illegal for you to hold Bitcoin only further proves the case for it. And so to answer your question, I think it would only improve the reasoning to buy Bitcoin. It's interesting, like I said, it further proves the use case. Like when the government says like drugs should be illegal, well, that doesn't mean you should go take drugs. I mean, drugs are illegal, right? But when they say like you shouldn't have a right to hold your own money, all of a sudden you're like, well, shoot, maybe I need to hold my own money now. And so in my opinion, I think it just further proves the utility of it and the use case.
Yeah, and I think, William, if you just look at Nigeria right now, right? Like Nigeria is probably the second largest user of Bitcoin in the world from a country perspective. Their government is extremely afraid of Bitcoin itself, and yet the people of Nigeria are beginning to buy it even more, right? And they've even gone so far as to quote unquote ban Bitcoin in their country. So I think that's what continues to happen. I think you'll see more and more people have, like you were saying, capital flight. Instead of going and sending their capital to a different country, they'll just put their capital into Bitcoin and fight against the powers that be.
Yeah, capital controls are one of the three things. It's part of the trilemma for central banks. The other two are independent monetary policy. It's capital flows, independent monetary policy, and a peg to the dollar, or and a peg to another currency. And capital controls are a way to basically make it so that it's very difficult to leave. Bitcoin has more or less destroyed that everywhere. You can't control capital flows anymore because they're black markets or whatever, and people are going to get out of the currency at a very rapid rate. And this is obvious in places like Venezuela, where a lot of people are going into Bitcoin or the dollar in the black market. And no matter how many capital controls the Venezuelan government puts on there are people that are able to escape with it because they have Bitcoin on a phone or in their brain or something like that. So capital controls are pretty much that, and it's more or less unenforceable at this point. So in a sense, Bitcoin has slayed that dragon already. Like, what does that mean going forward? It means that at least at first, there's probably going to be a significant dollarization of every economy. People are going to prefer the dollar over
over their own currency, and this happens in nearly every country. You know, especially places like Nigeria or wherever, where they prefer the dollar because it's a lot more stable than their crappy currency. So the central banks don't really have that many levers anymore, and they are slave to the dollar, and that's either their local currency has to be that way, or their population ends up adopting the dollar anyway. So as a result of that, what you get is, everyone on the dollar, more or less, and we already have the dollar hegemony. It's becoming stronger because capital controls can be more easily subverted. Ultimately, that means that people will be comparing dollars to Bitcoin, and Bitcoin is clearly superior in many ways. And as a result of that, I think they eventually, convert to Bitcoin as well, and that's happening in places like Nigeria as well.
Sorry, everyone. Awkward silence, dead air, as they say in the old days of radio. William, thanks so much, man. All right, Adia, your question, please.
Hi, guys. Thanks for hosting this. It's been very helpful to listen to you guys answer to questions that we post here. So I had two questions that I wanted to ask. The first one was about Coinbase's IPO and your thoughts on it. So I think a week ago, they posted their S1 filing that anyone can basically access through internet. And you could see a bunch of very important metrics, like the amount of users that they had, or the amount of Bitcoin notional that was transacted through their platform. And so I read a bunch of articles on their valuation, and my question is basically what it's going to mean for Bitcoin as an asset, because to me it seems like Coinbase going public, it basically defeats the whole purpose of Bitcoin, because it's a centralization of supply of an asset that's supposed to be decentralized. So just wanted to ask you what your thoughts were here. And the other question I had was about wealth redistribution aspect of Bitcoin, because I agree that for people who hold Bitcoin now, which is a very, very small percentage of total world population, once Bitcoin price settles, yes, they'll be wealthier than people who didn't hold any Bitcoin prior to that. But still, Bill Gates of the world, they would be able to acquire more than someone who makes $60,000 a year. So that was my second question.
Great questions.
I'll jump in.
For it.
I'll start with the IPO thing. It's not something that really interests me a whole lot, and I don't think it should interest most people that much either. So, the problem with IPOs is, and I've invested in lots of them, but pre-IPO. The problem with the IPO is that accredited investor rules, for your protection, you're not allowed to participate in them pre-IPO, and so instead people get them as soon as they go onto the market. But at that point, me and everyone else who bought them pre-IPO is dumping on everybody else, and so typically I don't think it's the best place for most people to spend a lot of time. So I don't have a whole lot of thoughts to dig into that. But to the second question, I do like that question. I'd like to answer that because basically what you're saying, or I guess you're asking, is that, and I hear this quite a bit, I mean, people that don't make a lot of money, they can't buy a lot of Bitcoin, or even if we want to play that out further, some people may not even hear about it or think about it for another year or two. And how unfair is it for them who don't make a lot of money or may not know about it in a year or two? How unfair is that for them when you have, as you said, Bill Gates or other rich people who can go buy a bunch of it? And what I would say is that it's perfectly fair. And the reason why it's perfectly fair is because, one, of course, today, everybody has the exact same opportunity to go get it. But more importantly, the reason why it's fair is because the system is fair. And so we use this, or I use this example on the live stream that we did about like a basketball game,
where, you know, LeBron James was born with way more skills than me. I could barely jump. I can't shoot a free throw. There's no way I'm going to dunk a ball. Is that fair that LeBron James was born with those skills and I wasn't? Well, not really, but that's just the hand I was dealt, right? But what is fair is that the game, or I should say the rules, are exactly the same for both of us. So he has advantages I don't have. It's not fair, but it is what it is. But the rules are fair. And you see, the difference with the fiat money system is that the rules are not fair. And so the rich people, the Bill Gates or whatever, are able to game the system, manipulate the system, use seigniorage, use the Cantillon effect to enrich themselves when the person that's making $50,000 a year isn't. And so life isn't fair. It just isn't. We're all dealt different hands in life, but the rules have to be fair. And Bitcoin, the rules are fair. So in this example, this person just finds out about Bitcoin in a year or two from now, and the rich people bought it all up. How will that person get Bitcoin? Well, they're going to get Bitcoin by providing value, by providing valuable goods and services to the people that have Bitcoin, and then they'll get it. So I would just say, I would just ask you maybe to reframe the way you look at fair, and look at fairness as we're all treated the same. We're all treated equally. We all have the same rules. And in that case, Bitcoin is fair.
Hey, Mark, if I can extend that a little bit also, you know, even beyond like a year from now, you know, think about 100 years from now, 200 years from now. You know, imagine someone who's born 200 years from now and the world is on a Bitcoin standard, and this person is born in the slums. They don't have a pot to piss in, you know, but if they're able to work hard and earn in Bitcoin and save in Bitcoin, you know, like you said, like it's about equality of opportunity, not equality of outcome. And that's what Bitcoin does. It's a reset on the global monetary system. And, you know, people, for example, like a lot of people are like, oh my God, somebody got in early and they have so much Bitcoin. Do you know how hard it is to have held on to a lot of Bitcoin if you got it in like 2010, you know, to see the price run up and not sell, and to have diamond hands, and, you know, that is very, very difficult. So if you got Bitcoin early, let's say, like, you know, you kept it, that's not luck, you know, that's understanding. And I frankly, I think those people deserve the Bitcoin they've got. So I don't know, a couple of things to think about.
Yeah, I think it was a great analogy. Thank you both. I, in particular, like the phrase that you provided, equality of opportunity, not the outcome. So yeah, I guess it explains a lot. But to my question about Coinbase, I know about pre-IPO business, and I know how usually you get the shares at a discounted price, and then once the IPO happens on the day of the launch, you just dump them into the market and make a profit from that. But still, my question is that when a company like Coinbase is going public, and according to their S1 filing, I think the total amount of Bitcoin notional that was transacted through their platform is like around $500 billion, I think. And they have like 40-something million of users. So what bothers me is just that the company that provides a supply for the asset that should be decentralized is actually going centralized, is going public. So
yeah, they're centralized because of fiat money, not because of Bitcoin. You know, they're a market, and the fact of the matter is they're not even the biggest ones. There are other exchanges around the world, particularly Binance, that's way bigger and do way more notional Bitcoin in per year and so on. I mean, oftentimes like you know, single days are well over like $10 billion and so on. So you know, despite that, you know, it's a marketplace, and it is possible that the government regulates them or whatever. The nice thing is we have alternatives. There are lots of other exchanges. There's, you know, at least in the United States, you got Kraken and Swan and, you know, River and Level and many others. So you can go and exchange them at those other places if they start acting badly, and many people already have, right? Like many of us think that they're not a great actor, so we're gonna take our business elsewhere. And you know, they have an institutional business, so for that reason they're like very compliant with regulation and so on. But I mean, there are alternatives to that, and I think people will utilize them, and it's up to the market to go pick them. And in that sense, it's a fair competition and not necessarily one that Coinbase has already won or anything. It is possible that they'll get legislation passed that effectively gives them a monopoly in this regard, but I don't think we would stand for it. So there you go.
Okay, yeah, I agree with that. It's just the next thought that I had was, what if other exchanges start to go public as well? Then the only option for retail investors, I would call it, yeah, retail investors would be to store their Bitcoin themselves, and I don't think everyone is ready for that.
And well, that's where you have to level up. I would encourage you to learn.
Yeah, I guess that's why I'm on this platform, because learning a lot. But thank you, guys.
Thank you really very much. Good conversation came out of those questions. Really appreciate that. Okay, Alexi.
Yes, hi everyone. Thank you for this room. A lot of interesting stuff has been discussed. I want to ask a question about the taxes, particularly in the US. I haven't followed this topic for a while, since I guess 2018, and I remember IRS was treating every transaction, even between your own wallets, as a taxable event. And has anything changed since then? And the second question is, when you prepare your taxes, how do you kind of do it? How do you track all of this? Do you have a CPA, or do you use any tools? Yeah, that's my question. Thank you.
Hey Brady, I'm just not sure. Do we want to keep this more towards questions about the Swan Signal Live episode? Or are we kind of doing a free ranging thing? I just wanted to
Yeah, we're kind of ranging around now. Does anybody want to take a stab at that one?
I can talk about that. So I would say the simple way to think about it is it's just treat it like any stocks. I mean, Bitcoin by the IRS is considered an asset. So whether you're buying and selling gold, whether you're buying and selling stocks, securities, it's taxed the same way. We're buying and holding, so there's not a lot of taxable events, but technically anytime you buy and sell, not transfer to your own wallet, but buy and sell, that's a taxable event, either a gain or a loss. Of course, always consult your tax professional. But I would say that the easy way is you just go on to wherever you bought your Bitcoin, or if you're using an exchange, and just print your history, download it in a CSV file, give it to your tax professional, and let them deal with it. Most people are equipped to handle that because, like I said, it's just treated the exact same way as securities or gold or anything like that.
Okay, thank you.
Thank you very much, Lexi. Robert, you're up next. Welcome up. Give us your question, please.
Hi, everyone. Thanks for the talk so far. So my question is on institutional accumulation. So I follow Michael Saylor on Twitter, and you'd kind of nearly jokingly get the impression that all Bitcoins are trending towards Michael Saylor. And I've heard how he talks about it. He's never selling his Bitcoins. He's going to borrow against them. And I get the impression that some other institutional investors might be doing the same. So is there ever a scenario where you kind of see Michael Saylor selling some of his coins? And I ask this question because I remember listening to Preston Pish talk, and he described the scenario where if everything in the world gets fairly repriced in Bitcoin terms, that Preston might be tempted to go and try to find some value, try to find some deals. So in 10, 20, 30 years, when we see a repricing, do you think that we might see some coins from institutional investors start to come back out on the market? Thanks.
All right. I can
take a stab real quick. I can take a stab. Yeah. So this to me is just the way an economy is going to work. It has to shift in a certain way, right? And when Preston's talking about the repricing, yeah, that's what's going to happen. And everybody has a time preference. And if Michael Saylor can figure out a way to run businesses for 100 years that let him keep his, are so successful that he gets to keep his Bitcoin and run them completely on an untouched stash of Bitcoin, then that's amazing. Like that's what Bitcoin incentivizes you to do. You should try to hold as much of it as you can. But yeah, there's time preference. You got to pay for costs for businesses up front, and all of that will happen on a Bitcoin standard, and Bitcoin will move around. It'll be pretty liquid, and once we are building our whole economy on it. So I think Michael Saylor will probably sell some of his Bitcoin someday, or at least his heirs who inherit it.
Let me just add on top of that, Brady. I mean, this is not a Bitcoin Michael Saylor phenomenon. This is how the rich build wealth. So this is how the rich build wealth. They buy assets and they own them forever, right? And so I was having dinner with Robert Kiyosaki like 3 months ago, and he was explaining to me how he never pays taxes because he never has any income. And so what he does, he's in real estate. So he uses real estate to do the exact same Michael Saylor strategy, where he buys apartment buildings and then he refinances them and pulls debt out. He uses some of that money to live on, and then he reinvests the rest into the next properties. They go up, they refinance them, he pulls debt out, he lives on some of the debt, and he buys more buildings. And so you can use Bitcoin like Michael Saylor suggests, but this, like I said, it's not a new phenomenon or strategy. This is what the rich do. They build assets, they keep those assets, they leverage debt, they lower their taxes as low as possible, and that's the key to getting wealth.
That help answer your question, Robert? Any follow-ups?
Yeah, cheers. Thank you very much.
Awesome. All right. Thanks so much for the question. Appreciate it. All right. Next question goes to Big Shiny.
Hey guys.
Welcome up.
Thanks everyone for being here and answering questions. This question is related a little bit to a few questions earlier. Just wondering if you guys are seeing or have good numbers, an understanding of where the retail market or the retail adoption is right now as of today. You know, we're seeing a lot of stories about institutional wealth coming in, et cetera. But I always have in the back of my brain that it would be fantastic if the masses really started picking up on this and claiming their stake in Bitcoin. So yeah, I don't know if anyone has any numbers or any sense of how quickly things are picking up in the retail market.
Well, I work at an exchange, a Bitcoin exchange called Swan Bitcoin. We're pretty new, but we are certainly have a good, I think, understanding of the activity behind the scenes, or of people in the interest of what's happening. And it's definitely retail, and it's also, obviously, there's lots of big businesses and institutions that are coming in, but it's equal parts retail investors, and seeing incredible amounts of engagement here on Clubhouse, for instance, doing beginner Bitcoin rooms for 12 straight hours and answering great questions. So just anecdotally speaking, there's a lot of retail coming in, and then also looking at the flow of new customers coming into Swan. I would say, you know, not in dollar terms, but in volume terms, number of people, it's roughly equal between retail and big investors right now.
Wow, that's fantastic.
Yeah.
Great, thank you.
You're welcome. Go ahead, Nelson.
Hey guys, thanks so much for putting this on and appreciate the hosting. I got a technical question about an app that was mentioned by Pomp called Sovereign. I don't know, Jimmy, if you've heard of that or you've taken a look at it, but it basically is doing like, it's on Bitcoin, but it allows people to do like decentralized Bitcoin trading and lending. But it sounded like it was all kind of built, I don't know, on Bitcoin, but I wasn't really sure. I kind of, you know, I do a little bit of development. I'm not, you know, super seasoned in it, but I was just curious. You know, I play with the node and I've done some stuff with the Lightning Network, but I wasn't really sure exactly when they say it's a decentralized platform that they built, like how exactly that's come about. I don't know if you have any insight there.
I don't know the product at all, so I can't comment on it. But yeah, I'd be very skeptical if they said something is decentralized. Generally, it's a very hard property to tack onto any product.
Right, that's what I would think too. Okay, I didn't know if there was something, Yeah, because they call it like a layer 2 product, but I wasn't really sure exactly because like, does it live on AWS or is it, where does it live? So
Where do you know where more information about this sovereign services? Like, do you know a website?
It's sovereign.app, sovryn.app. I remember looking at it, but I couldn't figure it out either. Or I didn't give it enough time.
Fair enough. And then the other question I had for you guys was about hardware wallets. Hardware wallets, a lot of people just have them sitting. They're just dormant once they get them set up. Is there any risk to not doing like firmware updates over time as kind of things get pushed out? Is there a spot where you're going to get, I don't know, left behind or vulnerable in any way, shape, or form?
Well, Nelson, like if you really think about what a wallet is, it's just a very big number. Yep. And if you have that mnemonic, right, and you understand what paths they're deriving from, then the hardware doesn't matter as much as you having that mnemonic. You know what I'm saying? Right. So even if something happened with the hardware, you should be able to generate the same private public key pairs based on that mnemonic.
Absolutely. Yeah, I didn't know if like in a worst case scenario, if like Trezor got, somehow hacked. I know the mnemonic side of it, but I don't know everything else that happens on that device. So I didn't know if there's some worst case like scenario if something happened to Trezor or Ledger that if there's any sort of other things that would lead to a compromise, just out of paranoia.
Hey Nelson, I just gave a once over on this sovereign thing. It looks like it's actually using RSK. It's basically like DeFi using RSK with Bitcoin. I don't know how decentralized it is. I can't speak to that at all. But it's not on Ethereum, as far as I can tell.
Yeah, and that's what made it interesting. It seemed like someone kind of went out of their way to actually try to build something off of rootstock. So
yeah, I don't know. I'm a little suspicious. The website is like very much like very Bitcoinery, like on purpose. It's like the exchange Satoshi would have used. I'm like, I don't know about that. So I don't know. They got honey badgers everywhere, but I don't know.
Absolutely.
I just logged into the app, so I'm gonna definitely be checking it out.
Okay, right on.
Yeah, I'll try to find out more about it, and
yeah, maybe we'll link up later sometime in maybe a week or two about it.
If it's interesting, I'll have them on probably Citizen Bitcoin. CitizenBitcoin.world is the podcast.
Awesome, sounds good. Thanks, guys.
Yep. All right.
Hey Jimmy, do you happen to know anything about RSK and how it works, or like the architecture of it at all? I haven't.
I know it gets merge mined and stuff, but I don't know too many details. Yeah, you'd have to talk to one of their engineers or something. I haven't investigated it too much.
Cool. Yeah. So there are second layers and third layers on Bitcoin. So there's lots of experimentation happening. And I've said this, before. I think people ask this question about like, does Ethereum compete with Bitcoin because all this DeFi stuff is being built on top of it, and NFTs and ICOs before that, and they're always first to the use cases, to the to the useful stuff. And really, Ethereum is just like this circus that sort of walks in front of Bitcoin, like does all of these acts, and then the ones that actually like get an audience of serious people will move to Bitcoin. So this stuff blows up on Ethereum, and it's usually pretty scammy. It's definitely very scammy and has cost people a lot of money and even SEC violations, etc. And then this stuff gets considered by the very serious, Bitcoin community. The developer community takes it much more seriously. I akin it to, writing software, operating system software for a nuclear power plant versus, hanging out in Zuckerberg's like backyard, trying to see who can spin up the best Instagram clone and get the most users in 24 hours. It's just, move fast, break things, push the limits on the legal side, the code side, quality, all that stuff, just pushing all the limits. Bitcoin's actually like a player on the global monetary stage because it's, treats itself seriously and is developing this protocol with the gravity of, a $1 trillion market cap. And if you listen to our conversations, the future of humanity. So this is a really serious endeavor. And Ethereum's fun, and it's people play games on it, but this is where the real stuff happens. Okay, sorry for that rant. Let's see.
Hey,
Chase.
Brady.
Yeah, go
Brady,
ahead.
I gotta get jumped out of here. So
All right.
I just wanted to let you know I'm gonna sign off here. But I know you got Jimmy and Lamar, so you got good hands. So I'll see you guys later.
All right. Thanks so much, Mark. Really appreciate your time today. And we'll talk to you again soon publicly. And looking forward to working with you behind the scenes a little bit more too.
Cool. See you guys.
Bye. All right. Chase on Laser Eye Honey Badger. Welcome.
Hey, how's it going, guys? Love all your work. Kind of wanted Mark's opinion on this too, but it's too bad he left. But
I'll give
when
you
the
Mark's opinion. Don't worry.
Okay.
No, I'm kidding.
Thanks. So when hyper Bitcoinization happens and we're all in our citadels, a lot of people are going to be on the other side of that, and probably some powerful people. So are we underestimating the social and the political attacks that we're going to receive? And what are the best and worst case scenarios that can happen when we transfer to a world of sound money?
Yeah, well, this one's kind of in the air today because we actually talked about it on the podcast, Swan Signal Live show earlier. This is a Q&A after the show. And then it actually came up again in the in this Q&A. And so it's showing its face for a third time, which is great. It's a very good question. And Jimmy, do you want to take a stab at this one, and we'll fill in if we feel like we need to?
Sorry, I wasn't paying attention. What's the question?
It's okay. The question was about the social attacks, on Bitcoin, like we were talking about in the show earlier, about governments banding together, or like the narrative warfare, kind of attacks on the social layer. How vulnerable
Nuriel
to Bitcoin
Rubini bangs on the front door of your citadel. Are you going to let him in?
Definitely
no. No. I don't know. I mean, we like trying to game this out this far out is I think a little. Yeah, I mean, it's fun maybe as like a thought exercise, but yeah, it hurts my brain just like trying to do all that. But I mean, the future is uncertain. The one thing that is certain is Bitcoin and 21 million. That's sort of the way I live it. But yeah, I expect there to be all sorts of attacks, and attacks tend to be very creative, depending on who's doing the attacking. There could be all sorts of them. Our job is to sort of steel ourselves against all possible attack vectors. But yeah, it's a fairly big attack surface, socially speaking. So hard to say specifically what that might look like.
Can I share just like a positive take on this? I think, like Jimmy said, the future is uncertain, but it's also what we make of it, right? Like if we end up with a world of, ultra rich Bitcoiners behind like castle walls with, a portcullis and no one can get in, and, there's hundreds of millions of people on the other side starving, like then we fail. Then Bitcoin, isn't, yeah, we've instituted 21 million, but then, equality is higher than it ever was. But I don't think that's the case. Let's say I'm part of the ultra rich, or my heirs are, because I have some Bitcoin now. Like I personally, I don't just plan to sit on my Bitcoin. I plan to start businesses and contribute to society. Like the Bitcoin that people are quote unquote hoarding now is not going to just sit in the vaults. It's going to power the future. And that maybe that's not true. Maybe that's idealism, but like, human beings, are very creative people, and we don't just want to sit on our asses all day. And I think that I don't see how that future doesn't necessarily happen, right? Like, people want to create value, and in a world of sound money, if you're not paying people in sound money, you're not going to get the best labor that you can. You're not going to get the best out of people. So I think, a true Bitcoin standard is not one where there are those who have Bitcoin and those who do not. It's one where, Bitcoin is flowing through the economy, if that makes sense.
Yep, perfect. Thanks, guys.
Is Gigi here? Gigi, get up here, man. Come on, let's talk Cosmic Bitcoin. I know it's late in Germany.
Gigi.
All right, guys. I think I'm gonna need to bounce as well. But yeah, I'm just like all of a sudden I think the steaks that I was eating during the first part of this Clubhouse chat are catching up, and I might need to take a nap. And this is one of my
You got
pleasures
some meat
of
sweats, Jimmy.
no meat sweats, but man, was that good.
Nice.
Yeah, and yeah, I think I need to take a nap or something and refresh a little bit.
All right, man. Take care of yourself. Enjoy
See you, Jimmy.
digesting that steak.
See you, Lamar. See you guys.
Thanks, Jimmy.
Take care, man.
Willkommen,
All right.
Gigi.
Hello, hello.
What's up, GG?
Yeah, good evening from Europe. I was just planning on listening in actually, but practically someone was on the stage.
No more that. Oh, I'm just gonna listen in nonsense. Okay, that your grace period of being like on Clubhouse for a week or two is over. All right, now you're part of it. You're in the mix.
You know, it's sleepy time for me. I'm brushing my teeth, getting ready for bed, trying to be responsible.
Hey, Jimmy was on here. We could hear the sizzle of his steak while he was on here. Okay, I don't care if we hear your toothbrush a little bit. All right, that's fine.
All right.
As long as we don't smell your breath, GG.
Clubhouse hasn't gotten that good yet. So
the 4D version. All right, Jeff.
Hey guys.
You've been up here for a while, waiting to get your question asked. So let's hear it, man.
Yeah. The first thing I was just going to say is the question that Adia asked earlier about sort of the wealth gap and asking the question about fairness of Bitcoin. I've been hearing that a lot, and I've been thinking about it a lot. And just one other consideration for how to answer that question is, aside from the fact that the wealth gap exists just in general, when you think about Bitcoin, until you were allowed to buy fractionalized shares of Amazon, there was a price tag. There would have been a price tag today of $3,000, which would have prohibited somebody who maybe makes $60,000 a year from even, investing in a high growth stock. You can't have access to commercial real estate deals. You can't meet minimum thresholds for hedge funds. So while it might be unfair that somebody has $100 million versus somebody that's making, $60,000 a year, their ability to invest in Bitcoin and to, see that wealth accumulate from the investment one-to-one of, by converting $1 of fiat to $1 of Bitcoin seems like something that's actually kind of beautifully fair, especially because it's, you have the ability to buy it down to such a small quantity. So just want to throw that out there as a consideration when that question comes again and see if you guys agree. But the other thing I'll say is something that I think that could be sort of to the unfairness angle. I've been watching CNBC for years. I just got into Clubhouse recently, learned a lot about Bitcoin as a crash course through this. But, it used to be once a month, you'd hear somebody come on and say 1 to 3% of your net worth needs to be in Bitcoin. Like that just used to be this thing that got repeated and you'd hear it occasionally. Now you see people coming on and saying it every day. So I'm wondering if you all see wealth managers and these large institutions that manage people's wealth passively, or at least passive to them. If you see in the next 12 months, them starting to convert 1 to 3% just in general as the standard allocation, where, that would kind of create a big rip in terms of a wealth gap if Bitcoin proliferates and the price goes way up, if you see that coming anytime soon.
Yeah. So I think in terms of wealth gap, all right, I'm going to address it in two different parts. One, do you see this kind of wave of sort of abstracted away money, pension funds, et cetera? I guess retirement funds would be part of that as well, and annuities, et cetera. Are they coming in, right, or allocating small percentage of their portfolio to those sorts of products? And the answer is yes, they already are. Mass Mutual has insurance products, company annuities, et cetera. They're the oldest insurance company in America, I believe. They are selling products that have Bitcoin as part of their portfolios. Banks, I think JP Morgan is building something out. Fidelity has something. So yeah, there's all the biggest names in the finance industry are already in or are coming soon. There's probably going to be an exchange traded fund for Bitcoin in the next, who knows, you keep hearing $1 trillion market cap and they'll do it. They'll allow one $2 trillion, $4 trillion market cap, but at some point they'll allow one. Canada has an exchange traded fund now for Bitcoin. MicroStrategy is offering as a de facto ETF, is acting as de facto ETF in the United States. So, that's available on the stock exchange. It could be added to diversified portfolios that are being managed by people. So it's already here, it's happening. And as far as like, were you asking about if that would contribute to wealth inequality?
Yeah, and that's kind of just something that I'm seeing as an issue. It's one thing to say kind of everybody has access to make the investment, but to the point earlier, like I started becoming interesting because of Clubhouse, and I only am able to be on Clubhouse because I can afford $1,000 iPhone.
Sure.
And I think, I don't know. I see a faster wave coming with people who have their money passively managed, seeing, notification that like 1% of their allocation has been moved to Grace, to GBTC, or moved to MicroStrategy, or an ETF of funds that have started to convert some of their cash reserves into Bitcoin. And people who aren't even making the decision for themselves are all of a sudden, create a huge separation from people who don't have access to people who are managing their money for them. That's just kind of just a comment more than a question.
Well, yeah, Jeff, I think the thing is that compound interest don't stop, right? So I think you can't really like think that it's going to completely flip the entire script, right? You can't think that, all of a sudden the wealth gap's going to go away. But the one thing that it does do, it allows access. The access part is really huge. Like, I don't think people understand how big that actually is, especially when you think about accredited and unaccredited investors, even here in the United States. Like, that compound interest is what created a lot of unaccredited investors from the standpoint of how you look at it, right? And I think that access to Bitcoin allows for people who might not be unaccredited investors to save their money in a different way. You know what I mean? So I think even whether there's still going to be a wealth gap, but I think it begins to get smaller the more people you tell about it, so that when they do save their money, they're actually saving it to asset. And like you said about the iPhone, I'm on a I'm on an iPod Touch right now. My thumb is bigger than the whole screen. So, so if people really want to gain access to Clubhouse, they'll figure out a way. I mean, I was borrowing my niece's iPod Touch before I bought my own. So, I mean, people figure out a way for even that. But with the thoughts that you have, the one thing you can do is you can start like adding to it, right? Like, you can start adding to the people who might not necessarily know about it by starting to educate people who you feel like don't have a fair shake or a fair chance at actually accumulating this, at the rate of everyone else. And I think that I don't think Bitcoin actually can change that. I think the only thing that can change how the gap works is love. Like, real talk. Like, if the people who have a lot of money, they are treating people bad that don't have a lot of money or a lot of assets, then that the only thing that works and fixes that is love, bro. So other than that, it's like just teaching as many people as you can to get involved and to take away the stigma, because even we're giving away coins and people are giving them back, are not accepting them. So it's a different game out here, man. Like, we're trying to give it to people who don't have a whole lot, and they're like, no, I don't want it. It's a scam. So, like, real talk. And we're trying to educate in the whole nine. People don't want to hear it. So there's a huge gap of information that needs to be had before you think about the wealth gap. And once you get the understanding there, then I think you can start worrying about the wealth gap. But yeah, it's just the system's been set up the way it is. And I just want everybody to sprint as hard as they can to buy up as many Bitcoin before Michael Saylor buys them all.
Well, I hope the representation of who holds Bitcoin and who will hold Bitcoin in the future is as diverse from an age and gender and race standpoint as the representation of the really smart people that are talking about it on Clubhouse, and have total faith that if some of the people who've hodled for a long time have to be the ones who figure out how to redistribute wealth and solve problems, that they'll be able to do it better than the current crowd that kind of controls all the wealth in the country. So thanks for doing everything you guys do.
Yeah, that's straight love, bro. That's gonna take love.
Yeah, I hear that. All right, thanks so much, Jeff. Appreciate it, man. And Gigi, are you asleep yet?
No, I'm still here, and I'd actually like to add something to this discussion, because I think it's a little bit underappreciated. But I think everyone kind of knows it. Like, the access to tools that allow you to actually store your wealth and keep up with inflation. The richer you are, the easier you have access to those tools. And Bitcoin is for everyone, so everyone has an equal access to a very good tool that does that. And so even if hyper-Bitcoinization is complete and we are on a Bitcoin standard, the need to use something else to simply store your wealth and save your money won't be as stark as it is now, with like literally every single fiat currency inflating as it is. So I see a little bit of a change and a closing of the extreme gap that we are seeing right now, that will be enabled by using sound money, because now we have like, it's not the 1% versus the 99%, it's like the 1% of the 1% versus the rest. And yeah, that's something to think about. And I think one can be hopeful about the future, because Bitcoin actually fixes this, at least in part.
Yeah, access is really powerful, GG. It really is, man.
All right, Ali, how's it going, man? How's the shawarma?
Yo, what's up, you guys? I'm really enjoying this conversation. I think you guys are doing a great job helping people understand more about Bitcoin, and I love being a part of this community. And I actually wanted to bring up a question for everyone, for all of you guys. You see a lot of Bitcoiners out there managing their portfolios. They're very smart people, and they have 100% allocation to Bitcoin, right? And why do you think that is? And why do you think Bitcoiners have do not currently have like diversification into stocks or gold or bond or other fiat instruments? Like, what's the benefit of doing something? Because you see a lot of smart people out there doing this, and I think it would be helpful to get your opinions, to share it with everybody, because some people think it's irresponsible, and some people think that these Bitcoiners are just YOLOing in. But the Bitcoiners know that that's not true, but it doesn't get talked about much. So I would love to get your answer on this, and hopefully it can benefit everybody that's listening.
I actually have a very quick one. Might be a funny answer to that one. If you allocate 1% of your wealth to Bitcoin and you forget about it for 5 years, it might be like 100% of your wealth. So I think that's one part of the and the thing is, the better you understand Bitcoin, like it kind of forces you, once you have skin in the game, it forces you to understand, like people usually don't understand what Bitcoin is when they buy some, because it's just so difficult to understand what this thing actually is. And then you're being forced by your portfolio what you got yourself into. And the more you understand it, the more comfortable you will be with what you have in terms of percentage allocation. The better you understand Bitcoin, the higher your percentage allocation will be. And I think so it kind of relates. It's really hard to sell your Bitcoin, because you also know the stories that selling Bitcoin is like, unless you need to eat or survive, is like, it's it's pretty much never a good deal. And everyone knows these kind of stories, people that sold and were very happy that they bought in at 20 cents and sold at 86 cents and they made large bank. And so,
hey everyone, thanks for being here today. This was our stream, or it's still going, of Clubhouse. We're going to end the stream on YouTube and Twitter
if you want to
right now.
quote unquote
Come join us at Bitcoin on Clubhouse.
What
Bye-bye.
kind of options do you have?